Back from FY28 to now, before we get to the broader outlook, of course. And let's talk a bit about Sensonic. And you mentioned briefly that it gives you cutting-edge technology for the railway segment largely. What is the sort of contribution to revenue that you see from Sensonic? How is it changing things for you?
Yeah, so as far as our current, let's say, targets for FY28 is concerned, we have not considered any of the new initiatives to be adding anything to those targets. So we are looking at, let's say, the $1 billion that we talked about is contributed to by the existing business, which is in the EMS space, plus semicon assembly space, and then PC board space. So these other businesses that we are talking about, we are giving ourselves 2 to 3 years time frame to kind of develop it into something which can be then grown for the, like I said, the Keynes 2.0. So beyond $1 billion, still the company would like to imagine that there is still market available. But the only thing is we need to prepare for it ourselves now in terms of all of these additional capabilities so that we can continue the growth path the way we have been growing, let's say, in the past few years, and then we continue to grow like this, beyond FY28. So as far as Sensonic is concerned, let me tell you why is it that it's cutting edge? Because it is one of the significant ODM platforms that we get. That means it's railway network safety related new generation, let's say, design and IP. And they already are working in 4 countries, that is India, Austria, UK, and US. And we'll augment their work, and they are working with some of the OEMs too. So it's kind of a different play than earlier. Earlier, we used to have our own design teams doing some design, etc., and customer will give specs, etc. But this one will kind of catapult us into a different stature altogether in terms of solution provider. So you can say roughly, so these are all hundreds of crores of businesses every year, and these are all businesses wherein you would not have too much of, let's say, cost pressures, because this is based on IP. So we think that it will be margin accretive. Say by FY28, we certainly should get
by
some
FY28, it will be margin accretive by FY28, you're saying?
Yes, maybe you can start seeing results from FY27 onwards itself. Okay. Then I am not able to give you a number right now, but it will be something significant.
Yeah. Now, just one last question very quickly, sir. EV, of course, is the big bet for Keynes technology. And the current sort of concerns in terms of sales at core passenger vehicle sales, I'm talking about at the retail front, are you seeing some of those headwinds back up for you as well? Are you seeing that playing out as the core demand starts to become a bit of a concern?
Yeah, Tamanaji, I think that is something that we always take it for given. So we work in several areas, 6 verticals, and really industry, if you go to industry sectors, about 10 sectors. So it's always likely that some or the other sector will face headwinds. And that's the nature of the economy. So electric vehicles, for instance, was a growth engine for, let's say, last year and so on. This year it's a metering business, a smart metering business, and next year it will be aerospace, and the year after that will be railways. So we always have an alternative, let's say, alternative industry tailwind aiding us whenever there is a headwind in a small sector. But overall, in the economic front, I think we are doing pretty well. So we don't see any problem in reaching at least the $1 billion mark in FY28. But however, we need to be alert about these changes, because we need to also manage our working capitals, and we should not exert in inventories and so on. So we have to be worried about it. But at the same time, there is compensation too. So in electric vehicles, it's not just the 4-wheeler and 2-wheeler that we manufacture things for. We are also into charging infrastructure. We are also into components business there. So slowly those are also gearing up, and some of them are global businesses. So so overall, maybe it is not as strong as one would expect it to be. But then we were always clear that electric vehicle, we always club it along with industrial and not with automotive, because it's yet to become a primary mode of, this is like a first buy for people. Maybe 2-wheelers in some extent has become. 4-wheelers is still out there, right? Where people are experimenting with it.
Absolutely. Thank you so much, Jairam Sampath, for speaking with us, whole-time director and CFO of Keynes Technology. Definitely one sector in focus, has been a favorite for a while right now for the market. But new favorites perhaps getting created this morning. Neeraj, look at the kind of listing we're seeing. 3 major ones in an otherwise muted market. And this is what investors love to see, right?
Green on the screen.
Green on the screen.
I wonder if MobiKwik is stuck though. That rate isn't moving. Maybe we'll get the stocks individually up and running. But yeah, Tamanna, green on the screen. And interestingly, they are all performing as per, let's get the stocks individually one by one. I think they are all performing as per their subscription numbers, Tamanna. Sai to Vishal to MobiKwik in the ascending order.
In that order. And MobiKwik, I mean, the huge, I think, retail investment interest and participation, the fact that they didn't really get, a lot of people did not get allotments. Look at that, 72% up. And they were the heydays when this was not a big deal. Yeah. But I think in this time it really is, and talks a lot about who are the investors, the promoters. It's definitely all about the promoters when it comes to this. And this duo on MobiKwik side has been solid from a while. We needed to take a very short break, but on the other side, we're going to be talking with Astha Jain about what you should do with these listings. If you got allotment, should you now sell? If you didn't, should you buy? What's the take? All of that on the other side. We also have today on Talking Point Capital Minds Deepak Shenoy. So stay tuned for that and more.
2025 में सेंसेक्स क्या 1 लाख छुएगा या पार करेगा?
मंगलवार को सेंसेक्स 1 लाख क्रॉस करेगा। कौन सा मंगलवार, ये मत पूछना।
2025 के लिए कोई नई थीम्स आप प्ले आउट होते हुए देख रहे हैं और जिनका ध्यान आप आकर्षित करना चाहेंगे निवेशकों के लिए जो अभी तक किसी ने सोचे नहीं होंगे?
वैल्यूएशन वैल्यूएशन वैल्यूएशन। आप प्राइस इज व्हाट यू पे एंड वैल्यू इज व्हाट यू गेट। पिछले साल हमने कई स्टॉक ऐसे देखे जहां पे वैल्यूएशन महंगा था और फिर भी लोग उसे खरीदते गए। फिर जब करेक्शन आया तो वो स्टॉक 30 से 50% गिर गए।
ग्लोबल ग्रोथ की ट्रेन में भारत की कोच पोजीशन क्या होगी?
अब हम इंजन है चाइना और अमेरिका के साथ।
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy
all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target.
It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. the newsmakers, the trendsetters, and the innovators.
Welcome back. You're watching India Market Open, and it's really the day belongs to the new listings rather than anything else happening in the market right now. While the rest of the market is pretty dull, by comparison, look at the three new players, and we'll pull them up for you. Yeah, there's the Nifty down about 80 points, but here's the debutants, as I like to call them. Vishal Mega Mart now 41% up as per its issue price. Sai Life Sciences 24% up, but the star of the morning perhaps is MobiKwik. Like we told you, 85% up almost on the stock. Astha Jain is joining us now. She's Senior Research Analyst at Hem Securities. Astha, good morning to you. And what we're excited to talk about is simply people watching right now wondering what they should do. A, if they got allotment, and B, if they didn't. So let's start with those who got the allotment.
Hi, good afternoon to all of you. Yes, first of all, we would like to say that whatever recommendation we have given, that turn out to be absolutely fine, the kind of listings which we are seeing. So now talking about, first of all, Vishal Mega Mart, I think it is a great stock, great story to believe on, and the kind of a sector it is working into, I think that sector has itself got a strong tailwind. So my idea here is those who have applied, because Tamanna, we always know, majorly retail investors, they apply for listing gain perspective. So to them also, my advice is don't book entire profit in this counter, because this counter is poised to show some major upside from here. Maybe it will take another 1 or 2 months, maybe 3 months, but I think this counter can move upside because I've just done my calculations with. So I think it has further potential to move at least 30% from here. So don't book entire profit in this. In case if anyone's perspective is just for listing gain also, to them also my advice is just book partial profit, because I think this stock can go till the level of 120 to 130. I cannot give more, bigger figures now, because that will be not right on my part, because I think right now we should enjoy the kind of listing. But idea here is just to book partial profit and stay invested in this counter. We can see further upside from here for Vishal Mega Mart.
Book partial profit, but stay in this counter, another 30% on Vishal Mega Mart. Let's talk about, I think, hero of the morning is MobiKwik, Astha. And if you had to rate these three, MobiKwik, Vishal Mega Mart, Sai, is this the order in which you would look at it, and talk a bit about what to do in MobiKwik?
So MobiKwik, I would recommend, because, I have to give my advice on the basis of kind of perspective the viewers or the retail investors, they are keeping into mind. So for listing gain investors, MobiKwik, book partial profit, because I think although it has got a upside from here, but now my upside targets are not very high. Maybe another 10% upside we can see from these levels in MobiKwik. It has already shown very strong performance. It is getting the advantage of being a profitable company, especially in FY24, and that is not only on the bottom line front, even on the operating levels also, they have posted profits. And what was the major focus or attraction of this IPO was, it was a completely fresh issue. So that was also major attraction. But right now, I think now valuation wise, it's better to book partial profit, because I'm not seeing much upside from here. Maybe 10% or 15% more upside we can see from here. But the kind of upside which I'm seeing for Vishal Mega Mart, not for MobiKwik at this point of time. So idea here is book partial profit definitely in this count.
I take the operational aspect of it and what you can do in terms of action to book partial profit in MobiKwik, but we must also remember that, and this is for the viewers too, only 38,000 subscribers have in fact been allotted MobiKwik shares, which means that there's a certain premium, a scarcity premium, which is being added to MobiKwik, and also another reason why it is up as much as 78% from its issue price. Under these circumstances, Astha, you would still suggest that only book partial profit and not the complete one. That's the reason. Is that another one of the reasons why you are suggesting that?
Because demand was quite high just because of the profitable nature as well as complete fresh issue. but we should see the valuation aspect also. Now it is trading at a price to book multiple of around 5, I suppose. So if I compare it to 197 communication, that is Paytm, now it is equivalent to those level, in fact higher to that level. So I think now the upside from here, because now we are getting 80% upside. So my idea here is upside is now limited. So book partial profit, because further upside can be seen, because maybe some retail investor, they really want to grab the stock. But I would like to suggest that now please don't grab the stock, let it fall and then make entry into this counter, because it has already moved a lot from its issue price. So for those retail investors who are just thinking of taking the counter at present point of time, my idea is just wait for some more dip and then make entry.
Sure. No, point taken, Asta. But in terms of concerns, do you have any with respect to any of these 3 IPOs? I know that they've surged right now, but there are certain risks that are associated with the kind of surge that we've already seen. Any concerns, fundamentally speaking, that you have with respect to any of these 3 companies?
So for Sai Life Sciences, I think that IPO was a great IPO and no one was predicting this kind of listing for this IPO. But I tell you, this IPO is one of the hero IPO, I should say, and it will definitely have a more potential to move upside from here. So for Sai, there was a concern, because they are into the pharmaceutical space. So that is the concern which is, applicable to all the company in the pharma space due to the regulations, etc. But I don't think any particular concern about this counter. On the contrary, I believe the management was super solid. In fact, the kind of facilities they are having, the kind of work they are doing, it is looking very strong to us. So major concern about Sai Life Sciences was not related to the company as such. It is related to the industry, which every pharmaceutical company has, related the client concentration coming from Africa, America, Europe, and there if some geographical tensions happen, then the business might affect, or some regulatory concerns. That's it. So nothing big concern about Sai. Now talking about Vishal Megawort, I think this is also a very strong company to bet upon. It has got a very strong interest, and we all know that now retail space is very hot. In fact, we all know the kind of valuation trend is commanding. So I think the same store sales growth is continued to be high. So I'm not finding any major concern in all these 3 IPOs, except the fact that they have risen a lot. So wait for some dip. To all the investor, I'm advising it, wait for some dip and then make entry into the counter. But you can make entry in particular 2 counters, which is Vishal and Sai, because we can see further upside from here. This is what I believe.
Okay. Thank you so much, Astha Jain there, and she's excited about Vishal, Mega Mart, she's excited about Sai, and of course MobiKwik is completely firing all cylinders this morning as well. The new Bs are doing well. I think one stock which is having a tough day is VA Tech Wabag. Let's just pull up what's happening to VA Tech Wabag, and we have Anushi joining in on more on that. The company secured a massive contract worth 2,700 crore rupees from Saudi Arabia, but the tender has been unexpectedly cancelled. I think, Anushi, perhaps what's bothering investors this morning is the lack of clarity on why that tender was cancelled, isn't it?
Absolutely, Tamanna. Now, I'll just give the size and how important this was for the company. So, we'll break down the whole order for the company. Now, the order was from Saudi Water Authority for about 2,700 crore, and this was for a 300 MLD mega seawater desalination plant in Saudi Arabia. What has happened is now this tender stands cancelled, with customer notifying that all tender participants said that tender stands cancelled due to their internal administrative procedures. Company is currently trying to get in touch with the customer to understand more in detail as to what is the future of this development which is to take place. So a lot more clarity awaits for this. But if we take the order value in size, is kind of a significant order that we're looking at. 2,700 crore. FY24, the revenue was almost at that size, and this was to be executed in the next 2.5 years. So strong growth opportunity for the business when it was supposed to be executed in the next 2.5 years. Order book also stood at about 40,600 crore as of September end. So of this, if we take the deduct the 2,700 crore figure, it is a substantial hit that we are looking in terms of the order value for the company. Do note that in the last 3 years also, if we look at Vatek's order revenue growth figures, we've not seen a substantial amount of growth. In fact, in the last 2 fiscals, we've seen a downtick in terms of where the revenue growth is concerned. So this could have been potentially a big beneficiary for the company, leading to a higher revenue growth. So more clarity awaits on what is the future for this order, whether this would be back on cards for the business again or not. So this is what is happening in VA Tech. The stock is down around 17% as a result of this.
Okay, there you have it. Viatech Vabak taking quite a hit and in fact coming off substantially from its recent highs. But from there on, we move on to yet another stock which has been in focus, and that is Ambuja Cement, with the news that it will merge its subsidiaries Penna as well as Sanghi with itself. Well, we have an Investec note, in fact, which has reaffirmed its buy recommendation on Ambuja Cement, and for that and much more, we now have with us Mihika, who's going to take us through this. Mihika, good morning.
Good morning. So I'll start off with the Investec note first. It's rated Ambuja Cement with a buy rating. It's maintained its rating and the target price is set at 950 rupees. And this target price implies a 65% upside. Now they've spoken about how the latest merger approval helps simplify the group structure, which is a key positive for the stock. It also helps simplify the compliance requirements and does away with the RPTs that are necessary for the company. Our Investec has also said that Ambuja Cement is best placed in terms of the key themes in this cement space like consolidation, sustainability, as well as ECG. A little bit about the merger. Well, Ambuja Cement yesterday announced that it will be merging Sanghi Industries and Penna Cements with itself. In terms of what's in for the shareholders, it will issue 12 shares of Ambuja Cement for every 100 shares held in Sanghi, and Ambuja Cement will pay rupees 321.5 rupees per share for every 1 share of Penna Cements. When you talk about the 3 key takeaways or the big positives in the deal, well, up first, we do have the merger will help boost the efficiency as well as enhance the competitive strength for Ambuja Cements. For Sanghi Industries, it's also a big move because it indicates more liquidity for shareholders of Sanghi Industry, which is a small to mid cap stock with limited shareholding liquidity right now. And lastly, the entire focus on the consolidation theme, as we've seen the Adani Group lead the consolidation theme, will help in terms of future capacity additions for the group.
While you're with us, Mihika, the other stock in focus is Jindal SAW. That has been buzzing this morning, and not everything is moving today. It's a bit of a quiet day, but Jindal SAW has been buzzing following a share purchase agreement with Renew Green Energy Solutions. Tell us about that.
So Jindal SAW will be acquiring 31.2% stake in Renew Green MHH1 Private Limited, which is a unit of Renew Green Energy Solutions, which is what the company's got into a share purchase agreement with. The acquisition will help procure electricity at a more conventional rate for Jindal SAW and would help its cost. The consideration is set at 31.2% of the equity share capital of the target company, which is Renew Green MHH, and the acquisition is set and expected to be completed by 31st May 2025.
All right, Mihika, thank you so much for getting us that update on Jindal SAW as well. But with that, we shift the conversation to, well, how markets are panning at the moment. And with that, we have Deepak Shenoy. He's the founder and CEO of Capital Mind. Deepak, good morning, and thank you so much for having us. Coming to us, talk to us here at NDTV Profit. Deepak, firstly, your check on the markets, broader markets specifically. It's been very, very mixed. And it's turning out more and more to be a lot more theme specific as compared to, a secular move. How are you reading into things at the moment?
So overall, I think it's December, so there's always lighter activity towards the end of the month. Not so great in terms of news flow yet. We have possibly most of the news flow for the month is kind of gone behind us. We might have a little bit more coming in Jan. Jan will get results. Jan will have a change in the US presidency effectively, and Feb 1st is the budget. So I think more activity happens going forward. Right now, I see the market being a little more volatile, both upside, downside. We've had a good month really. So I think, last 1 month has been kind of good, but you're going to see some corrections in the market no matter what you do. The mid caps have rallied. I think we're seeing some emergence of stronger government capex towards the end of the year, the last 4 months. So I think that will propel some of the companies that didn't do well in the last 2 quarters. So overall, I don't see this market as majorly negative in terms of anything from a trigger side. But I do feel like it's lesser volumes. So you're going to, lesser volumes in comparison, perhaps, and so you're going to see some volatility on both sides. Certain stocks will go up 20-30%, I'm sure, and so stocks will go down that much as well. I don't think I have a broad market view in particular in terms of trend right now.
Deepak, morning. Tamanna here. You know, since the morning in our studios, the chatter is about how more people are excited about the match going on rather than what's happening in the markets. And perhaps, at least the trend which we might see continuing into 2025 is also focus on primary markets. A lot of those new listings sucking up capital. I'm just wondering, when you're looking at allocations, or you're looking at what's exciting, are you seeing any potential in the primary markets, or is this going to be a phase to stick to the tried and tested, look at the large caps, the mid caps, which now should be actually positioned as large caps, and that's where you're focusing?
So Tamanna, we're biased because we're a PMS. We can't do anything in the primary markets. So I'm going to be like, we can't even apply for the stock. So
you're sounding sad about it, which is telling me that some great opportunities are being lost out there.
Well, I think there are always going to be opportunities, but the thing is that since you can't apply, there's nothing I can do about it. But so some of these companies may get interesting going forward. I'm not so sure about. The current, of course, we are seeing some extremely good moves on the market in terms of stocks listing, and there's some of the pricing in recent IPOs has been much better than earlier. So you're looking at companies whose listing values have been higher because they've been able to price the IPO lower. I think that's a good trend. People should price IPOs low. They're not diluting much, 5-10% in many cases. So I think pricing the IPO right is an art, and the investment bankers have stopped trying to optimize for the highest price, and perhaps promoters also have started to realize that pricing IPOs right is great. This is why I will miss the cycle, because earlier I didn't care because the pricing was so high, I didn't want to participate at those prices. Today, I think some of the companies you might be seeing much better pricing at IPO levels. But the secondary market has enormous opportunity here, both on the mid-cap space and in some of the large-cap space as well. I think what we're seeing today and what we're seeing 5 or 10 years later in terms of where the Indian economic system and perhaps market should be, there's a very big difference in valuations between now and then. Even our large caps in terms of market cap would be classified as kind of low-level US mid caps, both in terms of revenue and in terms of market cap. But I think as we scale as an economy, a lot of these companies will get there, specifically in manufacturing, perhaps in defense, perhaps in.
So when you're saying you're liking, there's a lot of opportunity. The secondary markets get a little more detailed, Deepak. What are you liking right now? Which sectors, and what are your 2 or 3 favorites?
Yeah, so we're still honestly quite happy to look at manufacturing as a theme. There's a lot more happening there. Part of it is defense, so defense-based manufacturing, I think that'll keep increasing. We'll also have a bunch of very interesting moves around in infrastructure, in the financial infrastructure specifically. So the companies that allow you to perhaps even trade, perhaps participate in bond markets or mutual funds, all of these companies, there's going to be a very, very rapid increase because India is financializing very, very rapidly. Last month, we saw 35,000 crores enter the markets. The month before was also 35,000 crores. We've seen this happen even when the markets went down nearly 10 or 11% from the top. So I think as we financialize, that's just mutual funds, there's also insurance, there's direct stock market participation. There is a lot of those companies, whether it is, say, a CDSL, we own this, by the way, or a KFintech or CAMS, who provide mutual fund infrastructure. I think there's a large change that will happen in their economics as we evolve there. There's also companies in the what we call the import substitution space, basically making here for India rather than trying to make in India and export to other people, because we import a lot of goods. And if you were to just replace maybe $5 to $10 billion worth of imports with local manufacturing, locally produced goods or services, we would actually not have a current account deficit at all. In fact, we'd probably end up having a current account surplus on a per quarter basis. I'm saying 10 billion a quarter, 40 billion a year. This is not meaningfully large for India to kind of not be able to do. So I think that is going to be the focus in the next decade, is building on these companies where you're catering to Indian demand. I run a portfolio called Surge India, so obviously I'm biased. But I like a lot of these companies. It's Indian tourism itself, Indian travel itself. A lot of companies in this space have already done really well, but I still think we're scratching the surface of what they will be in the next 10 years.
All right. Thank you so much for that, Deepak, and wish you a very happy 2025. We'll have you back for what the big ideas are for 2025 as well. So that was Deepak Shenoy, and a lot to pick right now. I mean, we can actually hope for a more optimistic note next year. But as we near the end of 2024, we spoke with Kotak Mahindra AMC's Nilesh about his predictions for the Sensex next year, and this is what he had to say.
2025 में सेंसेक्स क्या 1 लाख छुएगा या पार करेगा?
मंगलवार को सेंसेक्स 1 लाख क्रॉस करेगा. कौन सा मंगलवार, ये मत पूछना.
तो 2025 में सेंसेक्स क्या 1 लाख छुएगा या पार करेगा?
मंगलवार को सेंसेक्स 1 लाख क्रॉस करेगा. कौन सा मंगलवार, ये मत पूछना.
2025 के लिए कोई नई थीम्स आप प्ले आउट होते हुए देख रहे हैं और जिनका ध्यान आप आकर्षित करना चाहेंगे निवेशकों के लिए, जो अभी तक किसी ने सोचे नहीं होंगे?
वैल्यूएशन, वैल्यूएशन, वैल्यूएशन. आप प्राइस इज व्हाट यू पे एंड वैल्यू इज व्हाट यू गेट. पिछले साल हमने कई स्टॉक ऐसे देखे जहां पे वैल्यूएशन महंगा था और फिर भी लोग उसे खरीदते गए. फिर जब करेक्शन आया तो वो स्टॉक 30 से 50% गिर गए.
ग्लोबल ग्रोथ की ट्रेन में भारत की कोच पोजीशन क्या होगी?
अब हम इंजन है चाइना और अमेरिका के साथ.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy
all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target. It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deal.
Hi, thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Alex Matthew and with me is Mahima Vajrajani. We will take you through the next 1 hour of trade. Morning, Mahima.
Morning, Alex.
All right, now this show, as the name suggests, gets you answers to all of your stock-related questions, and to that end, we've opened up the phone lines and we speak to you directly. That number should flash on your screen very shortly. In fact, there's also the WhatsApp number, so you can send us a message in case you can't get through to the phone lines. They are usually buzzing off the hook, and we have to limit the number of calls that we get, unfortunately. We'd love to, of course, spend a lot more time speaking to you, but then we only have limited time. Let's very quickly jump into where the markets are right now, and you have the benchmark Nifty 50 that's trading with cuts of about 1/3% or so at this juncture, and it's a little bit of a weak market at this juncture, and that's par for the course really. If you look across the board in global equity markets, there's a little bit of caution ahead of the highlight of the week, which is the last FOMC or Federal Open Market Committee meeting of the year, and there's widely expected to be a rate cut. But there could be a fly in the ointment in that there are some outside chances of a hold by the Federal Reserve in the context of the new administration in the US taking charge next month. The Trump presidency comes into force, and there's widely expected there to be a little bit of an inflationary impact by the policies that Trump is said to be espousing, as a result of which there are some voices that are suggesting that maybe, just maybe, the FOMC decides to hold on to the rate cut that had a 96% probability even heading into today. Of course, the equity markets, let's go back to ours and talk about the broader markets and see where they are, because right now you have the Nifty 50 that's slowly coming off the low point of the day. Even the broader markets are actually coming back to the yesterday's close. Small cap index also down about 0.2% or thereabouts. So not much to speak of. Of course, we will talk about some of the key stocks that you should watch out for. Reliance Industries, one of the big losers in trade yesterday in that 1.5% odd drop, 1.4% odd drop that you saw in the Nifty 50. HDFC Bank was the second one that lost ground. It is continuing to lose ground today as well. But I very quickly want to point out the three debutants on the stock exchanges today. They all have had a stellar listing. Let's pull that up as well, because you have Vishal Megamart as well as Sai Life Sciences. A lot of investors that have gotten allocation will be very happy, but those that will be happiest will be the 40-odd thousand retail investors that have gotten an allocation. The IPO of MobiKwik, there were 46-odd lakh applications,
right,
and only about 40,000 or so have gotten that allocation. They'll be laughing their way to the bank.
Absolutely. So it's 1 in 120. You know, if you've received that allocation, I believe all the stars are aligned in your favor.
Yeah.
But moving on to some stocks that are really buzzing in trade today. One of them is Wabag, which has taken a significant beating, and this is because they'd received an order from Saudi Arabia, which was roughly of 2,700 odd crores. But now that order stands cancelled, and why the stock is seeing a significant downtick is because in FY24, the revenue was roughly 2,800 crore, and this order itself was 2,700 crores. So it could have doubled their revenue, but unfortunately the order is cancelled and we are seeing a downtick in the stock. Edelweiss Financial Services is another company that is seeing gains today, and this is because RBI has removed business restrictions on ECL as well as Edelweiss ARC. The stock did see gains in the morning, but it's down around 0.5% right now. Ambuja Cements, let's also pull up that. Sanghi Industries is another counter where the company has announced amalgamation of these companies, and we're seeing Sanghi Industries taking a downtick of around 10%, and Ambuja Cements is seeing, Alex, an uptick of around 1 or 2 odd percent. There you go. It was seeing an uptick of 1 or 2 odd percent, but it's down around 0.25% as we speak.
All right. So there you go. We will soon
hopefully be speaking to the management of MobiKwik as well, and so we've got that lined up for you. But in the interim, let me go across to our experts for the day. We've got Vinay Rajani, who's a senior technical and derivative analyst at HDFC Securities, as well as Rajesh Agarwal, who's a head of research at AUM Capital, at OM Capital. Thanks so much, gentlemen, for taking the time, and always a pleasure having you on the program, Rajesh and Vinay. Thanks so much. Let me go to Rajesh on the first question, because this is an interesting one. I had to ask whether Subramaniam, who's writing in from Coimbatore, has typed in the right price for Ashok Leyland, because he says that he acquired it at 20.6 rupees per share. And I do not know when he has bought this. It must have been quite a long while back, because the share is currently trading at 226 rupees. He's in it for the long term. He's not in a hurry to sell. Should he hold or should he sell, Rajesh?
Good morning, Alex, and good morning everybody on the panel. This is what long-term investment does. Almost a 10-bagger, say. And still, if you're not in a hurry to sell, I don't find any reason to get out of this stock. Although in the short term, there might be some minor blips because of the valuation concerns and all. But since you are for a long term, the company product profile is good. They're big players into CV, doing very well. Electric vehicles are doing well. Can continue to hold. If average return of 10 to 12% or even 15% CAGR can be easily achieved in the next 5 years. So continue to hold.
All right, so that's the view coming in on Ashok Leyland. The next query is from Mansi, and she's writing in to know about Kaynes Technology. She's saying that this counter has seen a significant growth in the last 1 month. She has a small investment in Kaynes Technology. She's not mentioned the price or the quantity at which she's bought it. And she's saying that looking at the valuations, is it a good time to increase exposure in Kaynes Technology? Rajesh, I'll stick with you for this one.
See, although the company is very good in the EMS sector, the entire EMS sector is doing very well. The new orders pouring, new tie-ups being done with different companies, and the world looking towards India for manufacturing and all. Indian government's focus on Make in India, but still on valuation parameters, I think all these counters, be it Kaynes, Dixon, and others, are trading at 3-digit P, which I believe is on a very higher side. Let it correct some more, maybe around 6,500 odd rupees by any chance it comes, then you can think of acquiring it. At this point of time, just wait and watch.
All right, so we've kept Vinay waiting. Vinay, thanks so much for holding by. I would like to ask you about a fresh entry in KRN Heat Exchangers, if you've got a view on this one. We've got a question coming in from Hemlata, who's writing in from Chennai. She's wondering whether to enter the current market price.
Yeah, so currently the stock is into a correction phase. The recent high was around 880, which was on 6th of December, and from that level it has started correcting. Right now it is trading at 753. So primary trend has been definitely positive, there is no doubt about it, but this correction could extend. We cannot rule out the extension of the correction, and the immediate support which I see for the counter is around 700 odd levels. So that is a strong support which is derived from the super trend indicator that we track on the daily chart. So according to me, 700 is a nice level or ideal level to take a short-term entry into the stock. As the primary trend is bullish, definitely dips can be looked at for buying the position. So yes, one can wait for 700 levels to come, and around that level one can buy the stock, because the primary trend has been bullish.
All right, so that's the view coming in on KRN Heat Exchangers. It's seen a significant amount of gain, 241% since listing, Alex. Moving on, another fresh listing that we had this year is Sagility India, and I think Sahil Jadhav wants a view on this, and he was wondering if these are the correct levels to enter Sagility India. Rajesh, I'll come to you for this one. Your view on this counter?
Stock has been news in the very recent past, I would say, despite the fact that it was recently listed. We have seen circuit to circuit going on for the last few days. I think these kind of stocks better avoided, because when these kind of stocks start circuit to circuit moving up, they again go circuit to circuit moving down. So the high risk counters, there are no enough data to talk about. So it's better be avoided. There are better counters in the market.
Counters in the market, all right. Avoid is a call in Sagility, which is trading at 43 rupees or thereabouts. We've got a caller, Chandan Jain, who's calling us from Karnataka. Morning, Chandan. How can we help you today? Chandan, can you hear me? Okay, we've lost the line. Okay, let's take the next question. We've got a question coming in from Karthik, who's writing in from Hyderabad, and he's bought Wipro shares, 30 shares at an average price of 253, and this is after the split, and so therefore he's gaining a little bit of ground. Is it a good time to add more, and what is the long-term view? I will go across to Vinay on the charts on this one. Because we've discussed quite a bit on the fundamentals in the recent past of IT companies. On the charts, does Wipro look attractive?
Yes, definitely it looks attractive. The important thing is that the relative strength amongst the IT stocks, if we were to compare Wipro with the other IT stocks, Wipro was the underperformer previously. But if I go by the last 1 year's trend and 1 year's performance, it has been outperformance, and now it is trading around its 52-week high. So the move was quite well, and the performance is going very well. So I think overall the relative strength is very high amongst the IT stocks, and it is actually developing a rounding bottom kind of formation on the monthly chart, which is very a strong pattern for the long-term reversals. The October 2020 high was around 365. Currently the stock is trading around 310. There is a high chance that it will reach to that level, and as stock has started outperforming the overall index, the benchmark indices as well as the IT index. So the setup is quite strong technically. If somebody is holding the long position, I think without worrying about the short-term correction and the running corrections, one can continue to hold on. At least we should have a 3 to 6 month view. But overall, I feel that the outperformance of the Wipro will continue, and it is headed for the next target of 365. So it is looking very strong, and one should continue to hold on.
Hold on, Wipro is a call coming in. Now, we did promise you at the start that we would speak to today's star debutant on the stock exchanges, and that is MobiKwik. We're joined by one of the founders, Bipinpreet Singh. Bipin, congratulations on a successful issue, on stellar listing gains, and I'm actually curious. When I saw that it was a fresh issue of 572 crore, my question was, a lot of founders have used this opportunity to offer their own shares. Why didn't you take that opportunity? Why did you go for a full fresh issue? And then we'll get into some of the other business trajectories.
Yeah, sure. So thanks for that answer. Firstly, thank you. I am very, very happy today because at MobiKwik we have achieved a milestone after 15 years. We wanted to get listed, and today we have achieved that. In terms of, I think, the process, we knew that MobiKwik as a company, we have done extremely well. We have survived many difficult situations, and we have faced a lot of competition with very less capital also. So the first thing that we wanted to do when we want to get listed is to make sure that the company as a MobiKwik can keep growing in the fintech space for the next 5 years, 10 years, 20 years. Because I am a very firm believer that fintech in India is here to stay, and fintech is going to make a huge impact in the lives of everyone in India. And from that perspective, not just promoters as I and Upasna, but all shareholders of MobiKwik decided that we should first get listed, and for that the company should raise capital rather than anybody selling the shares, because everybody is long on MobiKwik.
Okay, so thanks for that clarification. Why don't you take us through how quickly you're going to be able to utilize these funds that have come through? It's a tough market that you've operated in. You've mentioned already that you've survived challenges, and those challenges are not going anywhere, Bipin. It's a very competitive market. How are you going to be utilizing those funds? What is the kind of trajectory that you're seeing in terms of utilization?
So one of the things that we have learned is that if you can prove that you can not just grow, which we have done over so many years. In the last 3 years, we tripled our revenue from roughly 300 crores to last year 890 crores, but also become profitable. Because at the end of the day, even if I am a big technology believer, even if I am a big believer in fintech, at the end of the day, for MobiKwik to keep growing, it has to also to be a sustainable business. And so, one of the things that we have done, and not many companies in our space have done, is to showcase that fintech companies can also be profitable while growing. And so last year we did an EBITDA of like 37 crores and PAT of 14 crores, which is pretty unique in my view in our space. And so that gives me the confidence that given the large market that we operate in, and given still such a low penetration of financial products through the length and breadth of the country, through tier 2, 3 and beyond, I think the competition is only with the market, and the competition is only with the cash, and not necessarily with all peers, because it's a very, very large market. I think how you choose to operate in this market, what matters, and we have chosen that we will continue growing, but doing it in a profitable manner.
Bipin, Mahima also joining in. I wanted to understand that your growth in terms of revenue as well as bottom line has been quick in Q1 FY25 as compared to FY24. I just want to understand as to what the internal targets are with respect to FY25, and in terms of operational metrics also, you have 42 lakh odd merchants and 15 crore odd users. Where does this number go, let's say from a long-term perspective, by FY26?
So I think, one of the things that we wanted to do is keep growing on addition of new users, and even through the last 3 years when we had less capital available, we've each year added minimum 10 million, 15 million new users every year. And that's our strength, acquiring a large number of users at a very low customer acquisition cost, thanks to our brand, thanks to the trust that we've been able to gain with our customers, thanks to the user experience that we have created on the app. And the same story continues for merchants, where across petrol pumps, organized retail, as small mom and pop shops, we are continuing to expand, and we see significant opportunity to expand in this space, with also layering in our unique blend of innovation, which has kept us in very good stead. Products like Pocket UPI, products like Lens, these are kind of first in the market. And so therefore, in terms of it's less important in terms of numbers, but what is more important is that we continue growing significantly, and I have no doubt that I think growth is not going to be a challenge for us. I think we have seen in the last 10 years many cycles of downturn, whether it is in the financial space, whether it is in the due to regulatory reasons, whether it is overall market conditions, whether it is COVID, and we have managed to grow. Yeah. So I believe that we will continue to do that. I think the specific numbers we will come out with soon. Okay,
and we will speak to you at that point. But I do want to ask a couple of questions. One, I asked about the utilization of the funds. Bipin, I know that you said that you want to grow sustainably, but how quickly will you be utilizing those funds, and what are the primary avenues that you're targeting immediately? And the second part is that we've seen revenue mixes for companies like yourself change, morph over the years as the products that you've offered and the products that you build have developed and have come on stream. I'm guessing that you have a lot that is in the works as well. Does the revenue mix change meaningfully over the next 3 years?
So I think in the financial space, especially in our space, we started off as payments, which continues to be our largest growth driver in both in terms of users, in terms of merchants, and also in terms of revenue. First quarter Q1 FY25, it was 50% of the revenue as well, and significant growth over previous year. And the second business that we have is a distribution, where we distribute financial products, whether it is loans, small ticket loans, merchant loans, even savings and investment products like fixed deposits, mutual funds, digital gold, so on and so forth. And we also have license to insure, to distribute insurance. We have a corporate agency license. So I think that it is all up to us where we see the opportunity, what our customers need. And when I go back and look at middle class and lower middle class India, where MobiKwik is focused on, somebody who is self-employed, somebody whose income is, let's say, between 30,000 to 1 lakh, 1.25 lakhs a month, that person, anywhere he lives, he or she lives, can we provide them all these banking products at an affordable cost. And that is MobiKwik's mission. So we start with payments and provide the financial products with our partners, distribute them to our customers. So in that respect, there is a lot already which has happened and we have done, and there's a lot more that we are working on. Most of our spends that we are raised, we are not going to be in a hurry to raise this capital. We have raised it with a lot of blood and sweat. So we will be taking a call in terms of how we spend this. We have outlined it already in our prospectus document that we will be devoting some part to technology, some part to working capital, some part on the distribution of financial products. And I think we'll largely follow what we have already disclosed in the prospectus.
Right. Bipin, one last question before we let you go. I wanted to understand with respect to the loan business, do you think that you will be dispersing loans from your balance sheet going forward?
Not at this moment. We look at ourselves, our strengths being technology, product, customer experience and distribution. So in that, currently I don't see space for us having our own balance sheet.
Bipin, thanks so much for joining in and for speaking to us. And once again, congratulations from all of us. And we look forward to speaking to you after your next results.
Thank you.
All right.
Thank you.
All right. So that's the management of MobiKwik. What a debut. The question is, where do they go from here? And we'll see soon enough. If you have missed out on that IPO, I would like to very quickly go across to Rajesh. And we have a question coming in. Caller Balaji is calling us. Balaji, I'll come to you in just a moment. Rajesh, if you missed the bus on MobiKwik, as so many people have done, and you haven't gotten allocation, the first day, the first couple of hours, you're already up 80%. Do you still buy at this point, or do you wait for opportunities down the road?
See, I would wait for opportunities because you're already up 80% from issue price. And if you look at valuations are straight. But yes, the business model is very good, as we have heard the management just now. The focus on financial products and 50% of revenue from payment banks is a very good thing. Going forward with focus on the smaller cities, tier 2 and tier 3, there are a huge opportunity in the market, I would say so, because me being in the same kind of business, our company. So we understand that there are huge opportunities, but the numbers don't justify the kind of valuation at this point of time. So I would wait for some opportunities, maybe some downticks to accumulate, not at this moment.
Okay. All right. So let's go to our next caller. We've got Balaji calling us from Madurai. Balaji, good morning and thanks so much for waiting for us. How can we help you today?
Good morning, Alex. It's good to be asking the question in this channel after a long try.
Yeah, it's our pleasure to have you.
Yeah.
Please go ahead.
Okay, I do have 1,000 shares of IRCON at the rate of 261. You knew that when the market was peak, I have got these shares.
Yes.
So I just want to get the experts' advice. How long can I hold, or can I switch it to any other stocks?
Okay.
In the railway stocks.
In the railway space, I understand, Balaji, that you've got a long-term perspective, but how do you define that? When you say long-term, what is it for you?
I'll say a maximum of 3 years.
3 years, a maximum of 3 years. But you've bought it based on the opportunities in the space, right?
Correct. Opportunity in the mainly on the logistics space, as well as the way India is growing actually.
And a large part of internal goods continue to be transferred via the rail services. Balaji, let me get your question answered by Rajesh on the fundamentals. Rajesh, you heard the question. IRCON bought at 261 level. The stock is at 224. Would you hold on to this?
Yes, of course I would hold on to this because it has the entire railway space has seen some kind of correction in the last 5 to 6 months because of various reasons. One, the valuation was tragic, but they have run up quite a lot. First off, government expenses were not there, but government capex. But as the news flows are going on, that in the second half, government capex is going to go up with a focus on railways and all. IRCON is going to do well. Not only IRCON, the entire railway space is doing well with the new orders coming in. So I think when the gentleman has a time horizon of 3 years, one can continue to hold. We have a target of around 280 odd rupees in the next 12 to 18 months. So not only hold, if somebody is willing to add to it, one can even add.
So not only hold, but if one wants to add, they can add it on at current levels as per Rajesh. Moving on, the next query is from Sarat Babu, who is writing in from Dubai. He's holding around 19 shares of Tata Elxsi, bought at 9,000 a piece, and he wants to know whether he should keep holding them and or book loss and exit. This seems to be a technical question, so Vinay, I'll come to you on this one. How does Tata Elxsi look on charts?
So recently, in last 1 month, the stock has done well. Previously we saw a great amount of weakness or underperformance coming from this counter, because we saw many mid-cap IT stocks doing very well, like Coforge and Persistent, and many IT stocks did very well. But Tata Elxsi was struggling, and if I go by the short-term charts, yes, from the month of November, it has started getting strength, and it is holding above the key moving averages. It is still above the 50, 100 and 200 days moving average. That's a good sign. So some sort of recovery is there, pullback is there. Whether it is sustaining or not, that we need to see, because the primary trend has been down. But I would suggest that if somebody is looking for the short-term position, then better to keep it with a stop loss. The 70-100 is a strong support for the counter, which happens to be the 50 days exponential moving average. So I would suggest that if somebody is looking for short-term trading positions, he should continue to hold on to the long positions with the stop loss of 70-100. For last 8 to 10 trading sessions, stock is into a consolidation. But the way it has recovered from the lower level, definitely we can take a chance of holding the stock, because IT sector has been outperforming. So we have a good chance that this will also participate. So better to keep the positions with a stop loss of 70-100.
Thanks so much, Vinay, for that. We have to slip into a very quick break. Rajesh, Vinay, do stay with us. Viewers will be back on the other side to take more of your questions. So do stay tuned.
दो 2025 में सेंसेक्स क्या 1 लाख छुएगा या पार करेगा?
मंगलवार को सेंसेक्स 1 लाख क्रॉस करेगा। कौन सा मंगलवार, ये मत पूछना।
2025 के लिए कोई नई थीम्स आप प्ले आउट होते हुए देख रहे हैं और जिनका ध्यान आप आकर्षित करना चाहेंगे निवेशकों के लिए, जो अभी तक किसी ने सोचे नहीं होंगे?
वैल्यूएशन वैल्यूएशन वैल्यूएशन। आप प्राइस इज व्हाट यू पे एंड वैल्यू इज व्हाट यू गेट। पिछले साल हमने कई स्टॉक ऐसे देखे जहां पे वैल्यूएशन महंगा था और फिर भी लोग उसे खरीदते गए। फिर जब करेक्शन आया तो वो स्टॉक 30 से 50% गिर गए।
ग्लोबल ग्रोथ की ट्रेन में भारत की कोच पोजीशन क्या होगी?
अब हम इंजन है चाइना और अमेरिका के साथ।
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy
all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target. It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
The whole day passes like a blur. The news just whizzes past. And you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable.
Welcome back. You're watching Ask Profit, a show where we answer all your stock related queries, whether they're fundamental or technical, and you can either call us or WhatsApp us on the number that is flashing on your screen. Moving on to the queries for the day, our next query is from Krishna Moda, who's from Kolkata, and he's writing in to know about Hemisphere Properties. He's holding around 1,000 shares bought at 180 a piece, and he wants to know as to what could be the target for the next 2 years. Rajesh, I'll come to you for this one. Do you have a coverage on this particular counter?
See, they have a huge land bank, let me tell you. And even at these prices, I think the valuations are not fully discounted. The value of the land has not been fully discounted in this price. It can, the actual value, it comes to around 500 odd rupees. But that's difficult to say whether it will be monetized in the next 2 years or not. You have to hold this for a longer period of time. As and when the land is monetized, the numbers would be reflected in the balance sheet, and that would ultimately be reflected in the share price. But it's difficult to say at this point of time, 2 years time target. One thing I can say is it's highly discounted to its what intrinsic value should be. One can continue to hold.
Continue to hold is the view on Hemisphere Properties. Tata Steel, we've got quite a few questions on this counter, and I think, of course, the entire metal pack has been something to watch all of this week and last. Tata Steel not doing too much in trade today. Let's pull up the slightly longer term charts. Anandaram is asking whether it can be bought at the current juncture. I'm guessing, Vinay, that you would watch for the metal prices, the underlying moves in the global markets as well, and take a call on Tata Steel. But what would you do? Would you deploy right now if you had to?
So the trend is not clearly on the upside because the stock has been forming lower tops and lower bottoms. It is still trading below 50 days and 200 days moving average. So the trend has been down positionally for last 3-4 months, and there is no outperformance from the metal sector. It goes up, but it is not sustaining at higher level. But yes, I see a long-term support around 137, which happens to be the top which was made in the August 2021, and that the previous resistance levels can act as a support and for in the long term. So definitely 137 is a nice level to take a fresh entry into it. So the way it is it is there on the charts, I think one can start accumulating. So rather than allotting the 100% of the amount at this price, I would suggest that one can start accumulated in phased manner. So 25% can be bought here. Once it sees 3 to 4% further correction, then again rest of the quantity can be bought. So in 3 to 4 phases, one can start accumulating. So in that way, ultimately one is going to get the returns from this counter, because short-term trend is not that clear and the lower tops, lower bottoms are intact. So better to accumulate in phased manner, and 137 is a very strong support for the stock.
Right, accumulate in phased manner, and 137 is the support for Tata Steel as per Vinay. We have our next caller, Pavan Narang is calling in from Delhi. Pavan, thanks for calling in. How can we help you?
Okay, I have a question specifically regarding the stock Aster DM.
Okay.
So Aster DM, I bought I have the 200 numbers, and I bought at 470. I just wanted to know whether to make the investment for next. I'm a long-term investor. I can actually hold it for the next 10 years, right? But the important factor why I'm asking is the promoter pledge is more than 95%. That is where it goes negative against it. And whereas the positive aspect is recently BlackRock has already made an investment in that. Okay. So of course the deal would be in force from 2026, right? But with that, BlackRock would hold 30% of it, and promoter would hold 24% of it.
Got it. Pawan, I think you've done your research very well, so congratulations on that. I believe you've just bought it recently because currently it's hovering around the 493 levels.
I made an investment long back also, but with the dividend, it gave a huge dividend at that time in the month of April. Then I sold it off, and then I again made bought because I got the news that BlackRock has already made an investment, and yes.
Got it. Got your query, Pawan. Rajesh, I'll come to you on this one.
It's a very good stock to hold for long term. First, the entire healthcare industry is doing well. The Aster DM as a company is expanding in newer cities with new hospitals coming up. The big dividend that the gentleman is talking about has been given out of the sale proceeds, which we did in the GCC segment. They sold out the entire GCC healthcare business that was in Dubai and other states of UAE. So that was sold out and the entire proceeds were distributed as dividend. Now they are fully focused on India, doing very well, multi-specialty hospitals and all. Yes, there are concerns about the promoters' pledge and all, but these things will be taken care of. And with the entry of BlackRock and all, I think things are going to be better in going forward. One can continue to hold, and even one could add, we have a buy rating on this with a target of 650 odd rupees in the next 12 to 18 months. So at this point of time, it's a buy from our side.
I quite liked Pawan's voice, didn't you? It's a nice deep voice. Pawan, hopefully that answers your question. Let's take Mamta's question. Mamta is writing in from Chennai and she's got allocation in Vishal Mega Mart. She's one of the lucky few and she's making some money here. She's wondering whether she can hold for the short term and also the long term prospects. So short term, obviously on the technicals, we have absolutely no data to talk about. The stock is up about 40% as we speak right now. So Rajesh, any view that you have? Did you have a subscribe on the IPO and would you hold for the short or the long term?
For long term, it's difficult to say at this point of time, but for short term, yes, one can continue to hold. For me, for maybe another 20-25% upside from these levels too. This was a huge issue for almost 8,000 crores. But the best thing is the company has been in profit from last few quarters or maybe a few years. The main thing is focus on the value segment that's gaining momentum in the country and it's doing very well. With stores across the country, I think it's a good prospects going ahead. Maybe one can wait for a target of 130, 135 rupees where one can think of booking profit.
All right. The next question is we have Sagar from West Bengal who is writing in to know whether this is the right time to enter KPI Green. Vinay, I'll come to you for this one. Do you think the current levels are the right time to enter KPI Green?
So for last 10 months, I can see on the monthly chart for last 10 months, this stock has been into a consolidation. On the lower side, 720 is the lower band. On the higher side, around 1000 is the range. So this 300 rupees range is there for last 10 months. So if I go by the primary trend definitely looks positive and right now it is into consolidation. So yes, one can continue to hold on to the long position considering the primary uptrend. But if somebody wants to take a fresh position, I think again in this stock, as it is into consolidation, better to accumulate the stocks rather than allocating 100% of your money at this price. So the stock is completely into consolidation. It is very difficult to say whether it will break out this month or next month or after 2 months. But yes, the primary trend has been bullish. The stock has been placed above the key important moving averages. So overall setup is quite good, but the short term and medium term trend is into consolidation. So better to accumulate the stock for the long term. It is good, but trading momentum I can't see. So if you are a trader, then you should avoid trading this kind of stock. As an investor, I would advise that one should continue to hold on. And if somebody wants to buy, then accumulate is the right strategy for this stock.
Okay. All right, so that's the view on KPI Green, a different strategy if you are an investor or a trader. Safiullah Khan is calling us from Bengaluru. Safiullah, thanks so much for calling us this morning. How can we help you?
Yeah, I have 28 shares.
Please go ahead.
By Global. Yeah. I bought it at 528. I'm already at loss now. I think 30 to 40% loss already.
Yes.
Can I hold it or sell it?
Can you help us with some of the, just to understand what the strategy was? Did you buy from the perspective of a trading strategy, or did you buy it based on the fundamentals? And therefore, how long would you be comfortable holding the stock for?
I bought as an investment actually.
Okay.
For a short-time investment. But the stock soon after that it is already going down.
Okay. So what about the company stood out to you when you decided to invest in it?
It was a call from Motilal Oswal to buy this stock. So
Okay.
I bought this stock.
So you followed a brokerage recommendation. All right. Rajesh, on the fundamentals, let me get you to come in on a view on this. He's bought at elevated levels, 528. What is not working for this company, and would you hold on?
See, what is not working for this company is valuation. At these levels too, the valuation seems to be stretched. I don't find any reason to stay in the stock at this point of time. I think even from these levels, it can go down. So I believe that somebody recommended this with a strict stop loss or something like that. I don't know what was the point at that point of time, but still, if it was a short-term trading position or a swing trading position, one should have kept a stop loss. But at this point of time, it's a sell from my side. Switch to some other stock.
That's the view coming in on Vaibhav Global. The next question is from Raja Gopalan, who's from Chennai, and he wants to know the prospects of MSTC. Can he buy at the current price for a long-term perspective, say 2 to 3 years? Is the question he has. Rajesh, I'll stick with you for this one. Do you have a view on MSTC?
It's a void from a side. The valuation are overstretched despite all those stories of commodities and all going on. I think at these prices, one should avoid this.
Void is a call on MSTC. The next question is from Sagar. Did we take this?
Yeah,
we took KPI Green. Yes. All right. Swan Energy is what we're looking at next. And we've got Neha from Bengaluru, who's bought at levels of 627. She's looking at the next 2 to 3 months. And so from that perspective, on the charts, Vinay, should she hold on for a period of 3 months or so? And or should you book profits at the current market price? What are the prospects?
Yeah, so technically it is looking very strong. The stock is trading at its all-time high, and recently the stock has surpassed the double top resistance of 760 and now currently trading as 800. So very nice move in the last 2 months, and with the volumes, not only price but volumes are also indicating the bullish momentum buying going on. So yes, definitely one should continue to hold on the winners like this. The short-term trend has been bullish. If somebody is looking for the short-term as she wants to have a 3 months view, I would suggest one stop loss because 740 is a good level to keep as a stop loss for the short-term trading position. But unless and until that breaks, one should continue to hold on. So 740 is a stop loss level for the counter, but it is looking very strong. If market gives some sort of support from here, then definitely the stock is likely to extend its rally, and the stock is already trading its all-time high. It's better to keep the winner. And 740 is the level if market is not sustaining and continue to behave like this, the way it is behaving for last 2 trading sessions. In that case, I would suggest a stop loss at 740. But overall, I see extension of the rally, and one can continue to hold on to it.
Hold is the advice that we've got on Swan Energy, and 740 is the stop loss given by Vinay. Moving on, we have our next caller, Mayank Keswani is calling in from Bhopal. Hi Mayank, thanks for calling in. How can we help you?
Good morning, ma'am.
Good morning.
I want to know about Indian Overseas Bank. I have 2,500 shares of Indian Overseas Bank, and I have brought it for about 69 rupees.
Okay.
So should I sold it with loss or hold it?
Okay. When did you buy this, and what was the idea behind buying Indian Overseas Bank over other banks?
Yeah, like it was a like small stock.
Okay.
And it was high.
Okay. All right. And do you intend to keep holding this from a longer term perspective, or you would want to not wait and book losses? What is the thought process?
No, ma'am. I want to sold it. I want some money. That's why I have a query on this.
Got it. Vinay, your view on Indian Overseas Bank, should he book losses at current levels?
Yeah, so stock is into a correction phase from the high of 60. It has come down to 54, but the medium to long term charts are quite strong. But as gentleman is not willing to keep it because he wants to liquidate the position, then we don't have any other option. So if somebody is having a view of more than 2-3 months, then we are bullish on a PSU banks. As a house view is bullish for the PSU bank, and this is one of the stock which can do well. But if somebody is looking for the liquidating, then definitely I think there is no logic comes here. I think the maximum one can do is around keeping a stop loss at 53. If that breaks, then one should exit. Otherwise, wait for 1 or 2 weeks. If the stop loss level is not getting reached, then one can look for the pullback, and pullback could be around 57 also. So at higher level, one can exit at 57, and 53 should be the stop loss in short-term trading positions.
A significant regulatory update came through a short while back, yesterday in fact, and this is on Edelweiss Group. The Reserve Bank of India lifted the restrictions on the companies in that group, and in fact my colleague Neeraj Shah is in conversation with the chairman of the group, Rashesh Shah, speaking about the path forward for the group. Listen in.
So we have strengthened that. I think the team worked very hard, so it's always very gratifying that the work has paid off. We have been able to, convince RBI that our systems have become stronger, and always good to get back to business. I think it was a pause, but I also believe that sometimes in hindsight, the pause can also make you stronger because you are taking a little bit of a time off to make yourself stronger. And that is how our management teams have used this last few months on that. So I'm happy. I think we'll start 2025 on the growth journey again in those businesses.
Interesting. So for both of those, right? I mean, I've heard you say in the past in various conversations that the ARC business is a very cyclical business. Then I've also heard you say that on the lending side of the business, you want to probably remain a niche player with niche advantages and not be as much growth focused as quality focused. So how do therefore these businesses operate at a point of time when you have these things in mind, but there are no restrictions from the Reserve Bank of India? So what happens in 2025?
So as you know what happened in NBFC, we were a largely wholesale kind of NBFC a few years ago. And then after 2018, we decided, in fact, the wholesale business is a non-continuing business. We have actually stopped doing that business, but we had the old asset book that we were winding down. There was some stress in that. And we are building an MSME business from ground up level, which is a fairly nice, small, efficient business. Because I think strategically, to build a good, high quality business, MSME is a better place. Wholesale in an NBFC has no place anymore. For any bank or NBFC, wholesale credit is going to be a very difficult piece for various reasons, because of cash flows and NPA risk and all that. So as a result of that, last 4 years we've been winding down the wholesale book, which has come down a lot. It's come down by 80%, of the peak now. So we are in the process of winding that down, and we are in the process of building MSME. The RBI order came on the wholesale book that we can't do structured sale of the wholesale book, because we've been organically bringing it down, but we also were doing structured sales to some hedge funds and all. So RBI had some views on that, how to do that, what we can do, what we cannot do, how we can do, how we cannot do. So those we have strengthened and put that. So I think the pause was only on being able to scale back the wholesale book, which is a non-continuing business. The MSME scale-up has been going well, though the last 5-6 months the management attention and time went all on the RBI order. So the MSME business also will start to grow. So I think if I look back the next 5 years, ECL Finance or NBFC will be, it aspires to be a very significant player in the MSME credit business. And we have done a lot of work last 5 years. We are just taking it off because once the wholesale came down, the MSME business could scale up. We were just in the process of that when this order came, so it was like a pause. But now we'll be very, very confident of taking off the MSME business. And the same thing on ARC. Our ARC also earlier bought wholesale assets. Now there are no wholesale assets. As you know, bank NPAs are down, but some retail assets are getting built up. Retail NPAs are building up. So there also we are starting to buy some retail NPAs. We'll continue to do that. Retail NPAs are smaller amounts. So acquisition cannot be 8-10,000 crores a year. It will be more than 800,000 crores a year on the retail side. But we want to be a good retail ARC player also, because retail NPAs on the recovery and all is the new expertise. If you see the last 8-10 years, they were wholesale, steel plants and cement plants and paper plants and all. That was wholesale NPAs. Now I think the focus on efficiency of recovery and resolution will shift to retail NPAs, and our ARC is focused on that. So now with this order going off, we will again start scaling up that part of the business.
Got it. So how much? So would you say that? So this is great order, but a good win. But in terms of the overall size of the pie, these two businesses will be relatively smaller to the other businesses that you would have, and therefore they may grow fast, but their overall contribution to growth will be contributing, yes, but will not be a lion's share. Would that be a fair assessment?
Yeah. So if you go back in 2018, these two businesses were 85 to 90% of our profits. We had strategically also reduced because these are very capital intensive businesses, and I said in NBFC, we after 18 decided we want to be large asset based, we don't want to become 1 lakh crore. We don't have the capacity. Maybe it's a good thing, it's not a good thing, I don't know, but we don't have the capacity. If you're a large corporate house or a P promoted player and you have access to capital, cheap capital, it becomes this thing. We are a first generation entrepreneur company. Capital is always scarce for us. So going back to the drawing board and say where we can win in a niche area like MSME, within the credit. So I would think ARC and credit will not be more than 18-20% of our total pie, because in this last 5 years our asset management, our mutual fund, EAAA, our insurance business is also growing. We hope that they will break even in the next 18 months. So given that we have 3 clusters of businesses: insurance, capital market, which is asset and wealth kind of businesses, and we have credit businesses.
Right, so that's apologies, that's the management of the Edelweiss Group. In fact, Rashesh Shah, the chairman of the group, speaking about the path forward. You can catch that entire conversation over the course of the day. We'll play it out again. You should also be able to find it on the YouTube channel. Let's go back to our questions then. And we've got several coming through. Vinay, I just want to clarify, do you also have a coverage, or do you also, can you also give us a view on futures?
Futures of what? Pardon me?
Titan. So on futures of Titan, on F&O, do you have a coverage on F&O?
Titan, right?
Yeah, on Titan. So we've got Sundar who's got a question. Sundar from Delhi is writing in, and he's got one lot of Titan, 175 shares, 3,488 is the level. What is the kind of strategy that he can employ?
Yeah, so stock is into a consolidation for last 4-5 trading sessions. So it is looking strong overall. For last 1 month, it has moved well. So Titan future, December future has got strong support at 3385. Right now it is trading at 3410. So I would suggest it to hold on this counter with a future position with a stop loss of 3385, which happens to be the recent low. So keeping that stop loss, one can continue to hold.
All right, we have our next caller who's joining in. Dheeraj from Hyderabad is calling in. Dheeraj, thanks for calling in. How can we help you?
This is Dheeraj from Hyderabad. Actually, I'm holding MapMy India, 55 shares of MapMy India at 1845 rupees.
Okay.
So should I hold it or sell it?
Okay,
for short term, for 3 to 4 months maybe.
Okay, 3 to 4 months. So this is for a trading purpose that you've bought these shares for?
Yes, actually there is a recent change in MapMy India, regarding the CEO, Rohan Verma.
Right.
So at that particular time, I have entered on the current day.
Got it.
Regarding the good news.
Got it. Vinay, I'll come to you on this one. MapMy India, that is CEO Info Systems on the charts.
Yeah, so currently the stock has been quite volatile, and the recent high was 1946, and from that level it has come down to 1728. It is very difficult to trade in this kind of setup technically, but yes, the way it has moved up with the volume on 9th of December after some news, I think it is again got a chance to resume its uptrend. So currently the stock has got a strong support in the range of 1660 to 1680. This is a gap range which can act as a strong support. So 1660 should be kept as a stop loss in trading long position. And overall, I feel that the way it is moving, the positive divergence on the oscillators I can see. So there is a good chance that this will again resume its uptrend, will head towards the next level of 1950 in next 1 or 2 months. So one need to keep some positional view of 1 to 2 months, then one can definitely gain out of these positions.
Okay, All right, Dheeraj, I hope that answers your question. Container Corporation of India, and this is a question coming in from Anil, who's writing in from Bengaluru, and he's looking for a long-term prospect of this. Stock is currently trading down about 7% for the years, and it's not doing too much in trade right now. On the fundamentals, Rajesh, would you buy Concor?
Yes, if I have a time horizon of at least 2 years, I am buying Concor. The fundamentals are very strong and one of the largest logistic player. The railway lease problems which were there in the past has already been solved, and things are going to be better from here onwards. I think the way e-commerce and everything is moving on, logistic is going to be a big story going forward. And Concor being one of the largest player in the railway freight business, this is one of the best play. One can buy this with a target of 1,200 odd rupees in the next 1 year, 18 months. So it's a buy from our side. Somebody having this can hold.
We've got a lot of questions that are continuing to pile up. Unfortunately, we're running out of time. Rajesh, Vinay, thank you so much for joining in, for answering all the questions today. Always a pleasure. As I said right at the start, I will say it again. Viewers who didn't get their questions answered today, of course, we had to go to breaking news, unfortunately, today, but we have another session lined up for you tomorrow, and we will try and take as many as possible at 10:30 a.m. tomorrow. Of course, we have Ask Profit lined up in the evening as well. I believe it's 7 o'clock. Is it 7 o'clock? 7 o'clock. 7 o'clock is when you can log in, perhaps, if you have the time. In the meanwhile, we have to slip into a quick break, and we've got more programming on the other side, so do stay tuned. This is NDTV Profit.
में सेंसेक्स क्या 1 लाख छुएगा या पार करेगा?
मंगलवार को सेंसेक्स 1 लाख क्रॉस करेगा। कौन सा मंगलवार, ये मत पूछना।
2025 के लिए कोई नई थीम्स आप प्ले आउट होते हुए देख रहे हैं और जिनका ध्यान आप आकर्षित करना चाहेंगे निवेशकों के लिए, जो अभी तक किसी ने सोचे नहीं होंगे?
वैल्यूएशन, वैल्यूएशन, वैल्यूएशन। आप प्राइस इज व्हाट यू पे एंड वैल्यू इज व्हाट यू गेट। पिछले साल हमने कई स्टॉक ऐसे देखे जहां पे वैल्यूएशन महंगा था और फिर भी लोग उसे खरीदते गए। फिर जब करेक्शन आया तो वो स्टॉक 30 से 50% गिर गए।
ग्लोबल ग्रोथ की ट्रेन में भारत की कोच पोजीशन क्या होगी?
अब हम इंजन है चाइना और अमेरिका के साथ।
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy
all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target. It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, The news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with.
Hello and welcome to KYC, a brand new NDTV Profit show. In this fast-paced world of stock markets, investors are bombarded with information, but what they often lack is a deep, comprehensive understanding of companies they invest in. KYC, or Know Your Company, is a show designed to give you, regular investors, powerful, actionable insights into the fundamentals of a single NSE-listed company every single day. And today, we're taking up Senco Gold. Now, Senco Gold has actually seen considerable gains over the past few years. In fact, it has moved from strength to strength. This specific jewelry retailer was incorporated back in 1994. And at the moment, it is a pan-India jewelry retailer. It sells gold, diamond jewelry, as well as other precious metals in terms of its inventory too. And in terms of its stores, total stores out there are about 166. It also has about 67 franchisees. And overall, it does seem like it's on its way to the expansion path. But you know, as we do in all the shows, we're going to talk about a handful of parameters here, which you could consider in terms of, bringing you about how the performance of the company has been and the kind of ratings that we here at NDTV Profit give on the various parameters. So we do consider the income statement, the balance sheet, return ratios and cash flows. And besides that, we're also considering, the shareholding pattern, among others, street credentials, in terms of how the company has done, street coverage, as well as valuations. And to help us out with these ratings, I have with me my colleague Mahima Vachrajani, who's also going to take us through, in fact, these very many parameters here. And we'll try and figure out the thumbs on these, thumbs up or thumbs down on these, and give you a final rating on the company. Mahima, thank you so much for joining in. Why don't you just take us through the kind of growth that the company has seen and in terms of operational profitability as well?
Absolutely, Agam. So in terms of the income statement check, it's a complete thumbs up for the company.
Yeah.
Now in terms of revenue, the FY24 numbers stood at 5241 crores, and the 3-year CAGR of revenue growth has been 25%. In terms of EBITDA, the EBITDA stood at 377 crore, and 3-year CAGR for EBITDA has also been 26%. In terms of EBITDA margin, the EBITDA margin has remained range bound. It's been around 7.2% in FY24. But in terms of net profit, the net profit stood at 181 crore, and it's seen a 3-year CAGR growth of 43%. So in terms of all the 4 key parameters, Agam, it's a thumbs up for this particular company. They've seen double-digit growth across the 3 parameters, except for, of course, the margins. The margins have remained range bound.
Right. Well, range bound, but the fact that you see that growth, which means it's translated into the bottom line as well. But let's talk about the balance sheet then. Now, the network stands at a healthy nearly 1,370 odd crores. It does have a substantially higher debt. But we must remember that this company is in the growth phase, which means that when it comes to expansion, it has been investing a lot. So its gross debt stands at around 1,500 crores. But you must also remember that it also has cash flows, or rather not cash flows, pardon me, but cash reserves on its balance sheet as of FY24, which stands at around 552 odd crores. So on a net basis, its debt level, or its overall debt level, is lower. In general, of course, this also brings that net debt to equity ratio at considerably lower than 1. So based on that, we will
at the moment give it a thumbs up. But what about the return ratios, Mahima?
Right. I mean, return ratios for this particular company has been a bit disappointing, because in terms of return on equity, we've seen that in 2022, the return on equity stood at around 15.6%, but that has come down from 14.2% in 2023 to 12.5% in 2024. So I believe the stock is not catching up as to how the company has actually performed over the past 3 years. And in terms of the return on capital employed also, we've seen a downtick in 2022. The return on capital employed was approximately 19.4%, which came down to around 19%, so similar range of 2022. But in 2024, we've seen a downtick of around, it's come down to around 15.7% level. So it's a thumbs down when it comes to return ratios. I believe the stock will probably, see gains going forward, but at present, the return on equity stands around 12.5%.
Right. And of course, we must also remember that, a good ROE and ROC number is around 20-25% and northwards of that. So it does seem like at the moment Senco Gold is not only falling short of that, but it's also coming off by quite a bit. But let's talk about cash flows. And on a cash flows from operation basis, we have seen a net outflow. But we must again also remember that the company is in its growth phase, which is why on a net cash flow basis as well, we're looking at a positive number, which hasn't been a very large one. But at least as far as FY24 is concerned, we've seen a little bit of an improvement in its cash flows as well, which is why we'll give it a neutral rating on this specific parameter coming in. But I will also go on and talk about the shareholding pattern. Now, as far as the shareholding pattern is concerned, it's a well-held company. So firstly, the promoters hold well over a third of the company, 67.5% to be precise, and another near 20% is being held by institutions. So when it comes to long-term investors and holders of the long-term, it's a substantially good number. That actually leaves with just a little over 14% with your retail shareholders or the public shareholding. So, and because of the fact it's a well-held company, the company also enjoys a little bit of scarcity premium coming through, and for that we will give it a thumbs up. But in terms of its price performance, Mahima, it's outperformed.
Yeah, absolutely. In terms of the 5-year share performance, it's gained around 186%. 1 year has seen around gains of 55%. So in terms of the stock uptick, it's not been too bad, which is why we've given a neutral rating for the particular counter. But in terms of the dividend payout ratio, there has, in FY24, there has been a dividend payout ratio of around 0.08% versus that of 0% in FY23. So the company has now started paying out dividends. But we will not see a large amount of dividend being paid out, and that is because the company right now is investing in its own growth, and we're seeing that because the company is also adopting it's been expanding in terms of store expansion as well. Right. And we've also seen that it's the only listed player which is also foraying into the lab-grown diamond space via its stores called Senes. So all of these expansion plans that the company has going forward also in the international markets as well, I think the money is probably going there, which is why the dividend payout ratio is low. So in terms of the street cred performance, we've given it a neutral rating.
All right. Well, there you have it. But that's notwithstanding the kind of staggering growth that the price performance has seen as far as the share is concerned. But what is the street making of this? Well, at the moment, the street is sanguine. So firstly, we have 6 analysts on the consensus who cover Senco Gold, and all 6 analysts have a positive rating on the company. And in fact, if you take the average of the price targets for all these analysts, that entails a 28% upside from current market levels. So that's a thumbs up as well. But there's another reason why there could potentially be why this upside seems significant is valuation. So how are valuations looking, Mahima?
Absolutely. I mean, if we compare it to its peers, Senco Gold's valuation look really attractive at present. Although they're not low, but as compared to peers, the valuations look attractive. Currently, it's valued at around 49 times in terms of price to earnings. And if 2025 estimates as per Bloomberg suggest that this will go down to 37 times. And this with respect to the peers, Kalyan has seen a significant significant run up, which is why the valuations of Kalyan stand at around 128 times, and going forward also in 2025, the Bloomberg estimates suggest that it will somewhere cool down to 101 times. Titan, on the other hand, though Titan is also involved in a lot of other businesses other than jewelry, but almost 75 to 80% of Titan's business comes from Tanishq, which is why we've taken it as a competitor. And Titan's current PE stands at 86 times versus that of 83 times as per Bloomberg estimates of 2025. And lastly, the recently listed player, that is PN Gadgil, has current valuation of around 33 times, and it will go to 44 times. So PN Gadgil will see an uptick in terms of valuations going forward, so it will become expensive. But Senco Gold, on the other hand, will see a downtick in terms of valuation, so it will come down to 37 times in terms of PE versus that of 49 times. Agam.
Okay, so that's your view as far as this performance is concerned, what the street is making of, and let's put all these parameters together and give it an overall rating for all the factors that we've spoken about. So when it comes to the income statement, strong balance sheet check, we're giving it a thumbs up. Return ratios, not so much, so it's a thumbs down, but a neutral rating to cash flows as well. In terms of other factors, again, when it comes to shareholding, very well held, so it's a thumbs up. Street credentials, well, certainly neutral here. Street coverage as well, a thumbs up, along with the valuation picture. So overall, if you take the total score here, that will come to roughly 6 out of 8. So it's not a bad score at all as far as Senco Gold is concerned, given the current world circumstances. With that, let's also very quickly touch upon the strengths and weaknesses, opportunities and threats for the company too. So I'm going to talk about the strengths, and of course the studded mix has remained intact, where despite the slowdown in demand and competition, it's the only listed player that is forayed into a lab-grown diamond, notwithstanding Trent, which is actually not a jewelry peer, but Trent has also ventured into it very recently. But it maintains a hedging policy of around 80 to 85% on gold inventory. That's the other strength here. In terms of weakness, again, gold metal loans coming in at around 62% of the total borrowing. That could be something of a concern here. And strong presence in the eastern markets only, which means that it could do well with a little bit of diversification, and the value growth is more than the volumes growth, but that's something with to a certain extent also keeps changing in terms of the environment. Mahima, what about the opportunities and threats here?
Right, Agam, so in terms of the opportunities, the jewelry market is, set to expand going forward. Every year we're seeing that the weddings are, the number of weddings that are taking place are outpacing the ones that took place last year. So we're seeing that the market of jewelry is going to have a robust expansion, and this will be at a rate of 15 to 16%. And Senco Gold can easily tap onto these opportunities. And the organized jewelry segment is now seeing a growth as compared to unorganized. There was a time when the unorganized space was much higher than that of organized space, but now we are seeing that the ratio between organized versus unorganized is that of 40 and 60.
Right.
So I think people are more, skewed towards buying jewelry, gold, diamond jewelry from the listed players, the known players, rather than going to small shops and buying gold there, because of also, the kind of adulteration that is taking place. So these are the opportunities, but some of the threats, that could possibly weigh on the company could be, first of all, slowing down of urban demand. We've seen that big players like Titan have already seen that volume growth has not taken place for them in the first half of FY25. Secondly, lab-grown diamonds is kind of hindering the demand for natural diamonds. So while Senco is foraying into the lab-grown diamond space, this might kind of impact their natural diamond sales as well. And lastly, the competitive pressure, though, is less, but it's still coming in from the organized player. It's still a 40% of the whole market, which could possibly, pose some threat on this particular counter.
Okay, so that's as far as its SWOT is concerned, but there are just a handful of more, parameters and elements that we want to include before we get the management in. So I'm going to talk about firstly the Senco Gold studded ratio for FY24 that stood around 11%, and for the first half of this FY25 that stands around 10%. So there hasn't been a big change, but it has come off to a certain extent. In terms of its average sale price, that particular ticket has moved up. In fact, it's the average sale price, has gone to around 49,000 as against 41,000 back in FY24. So that certainly is an improvement, in this period. And finally comes to the average ticket value. That again has seen a little bit of an improvement if you consider the FY24 numbers as against the first half. So the first half of FY25 stands at around a little over 74,000 rupees, and for FY24 that same number stands at around 63,700. So improvement in these two parameters is something that we've seen as well. But let's also talk about its expansion in international markets as well as the outlook going forward, Mahima.
Absolutely. So the management has already guided that they want to expand internationally as well, and they plan to tap into the global markets as much as they can in the next 5 to 6 years.
Yeah.
Now, the traction in the current year, they've seen around 20% growth in their international markets already, and the same store sales growth stood at around 12% for them. Now, in terms of forward outlook, in FY24, they plan to open around 18 to 20 new stores, and 70 to 80% of the growth targeted will be from Eastern as well as Northern India, and they're targeting to improve their EBITDA margins towards that 8% mark, which currently is around at 7.2% mark, and they're focusing on increasing the studded ratio, that is the sales from the diamond jewelry. We've seen that FY24 had around 11% and H1 FY25 has had it around 10%.
Yeah.
But they're planning, they have strategies in place which will improve this studded mix, and they're expecting a top line growth of around 18 to 20% in FY25, and the management aims that the studded ratio will be around 12.5 to 13% going forward. So this is the overall forward outlook and the guidance that has been given by the management already.
Right. So let's put this in a perspective even when it comes to valuations right now. And as Mahima has mentioned, that for FY25, Senco Gold has been put in at around 37 times in terms of its price to earnings ratio. Now, if you consider the growth that the management is indicating, and by that I mean they're expecting the top line growth to be around 18 to 20%. I'm not going to try and extrapolate what it means for the bottom line, because a lot of that will depend on their operating margins, and their operating margins would also depend on the mix of the kind of jewelry that they've sold. Naturally, diamond studded jewelry enjoys slightly higher margins as compared to purely gold jewelry. But if you just were to make that assumption of around 20%, at this point in time, at 37 times, Senco Gold does look like it's going at a significant discount to a lot of its peers. Now, that's not to say that a substantially larger peer like Titan isn't growing at that rate, but there is a little bit of maturity setting in as far as Titan is concerned. Kalyan Jewelers is the other one, and that's a curious one, because while growth, again, is something that we must consider in this case, but that's trading at 100 times FY25. And again, these are retailers, and it does lie somewhere between Titan and Senco in terms of size too. And of course, PN Gadgil is a newer entrant here. Surprisingly, looking forward as far as FY25 is concerned, well, that stands around 44 times as well. So that's how valuations are stacked up. And perhaps these valuations will change even also as well, because do remember that the ongoing quarter is the biggest quarter for this entire sector, being the marriage season. And of course, to a certain extent, January will also have some sort of an implication. The question really is, how can that pan out? So Mahima, on that note, thanking you for joining us and giving us that outlook, as well as giving us so much more insight with respect to fundamentals of the company. But let's take this conversation forward with the management. Well, we have Shivankar Sen, MD and CEO of Senco Gold. Mr. Sen, well, good afternoon and thank you for taking the time out.
Yes, good afternoon.
Mr. Sen, we've actually spoken a lot about your company just right now, and it does seem like on a fundamental basis, you guys are on a very strong footing. I reckon that my first question will have to do with the fact that we're expecting about an 18 to 20% growth here on. Where do you think that this growth will come from, and what are the areas that you think that could contribute to this growth?
So what we are seeing right now, if you're analyzing the growth that we have done till now, if you ask me, the YTD growth as we speak today is around 16 to 17%, and out of that, about 12% of the growth comes from the same store sales growth, and about 4 to 5% of the growth comes from the new stores that we have opened over the last 1.5 years. So, you look at the festive season, October was a great month. We had 1,000 crore sale on a single month. If you look at Q2, we have seen that in Q2 also, because of the duty cut that happened, we had an amazing Q2, the best ever Q2, with almost a 29% growth in the smaller tier 2-3 towns and cities. And these are the, where you see the opportunities of growth lying. And, the unorganized to organized story is something that everyone has been talking about for the last 5 years, 7 years. But actually, that growth is coming from the smaller towns. And as we expand also, we are very much aware that, we come from the eastern part of the country, and our focus for growth will be Eastern India and Northern India. East is where we already are strong. The brand is very much known. Leveraging the brand, the goodwill, the marketing expenditure it's just a very natural thought process. And North is the market which I think is open for everyone to come and explore. The possibility of diamond jewelry sales are higher in the northern part of the country, because culturally they are much more, I would say, inclined to buy more diamond jewelry. So it helps with the margins also, with the stud ratio going up. So I think that geographically it is East and North. In terms of store-wise, it is the same store sales great, which same store sales growth of 12 to 13%, and the new stores 5-6%. And diamond jewelry, if you really look at it category-wise, it is gold jewelry which is driving the growth more this particular year, because customers are looking to buy more of gold with the gold prices going up. The growth in diamond jewelry has been comparatively lower. So, people are saying, okay, we'll wait for some more time. There was a lot of confusion with the lab-grown diamonds, the prices of diamonds not going up as much as gold. So I think it's going to be more of a gold-driven growth, but I'm sure next year diamond jewelry sales will pick up. Prices will go up, because now the US, with the new president and the US economy looking up, the worldwide demand of diamonds will go up and the prices will go up. So this is how we would like to look at the overall picture.
Right. So, well, Mr. Sen, my next question is to do with your average sales price, which has moved up considerably over the first half of this financial year. The number I have is about 49,000 rupees, as against nearly 42,000 rupees at the end of FY24. Similarly, your average ticket value stands at around 74,300 at the end of the first half of this financial year, against 63,700 for FY24 by the end of that. So we are looking at significantly improved metrics here. But you're also saying that to a certain extent you are looking to convert the unorganized market, and that's what all the organized players are looking at. Do you think that there could be a little bit of moderation in the growth in both these parameters that we are talking about at the moment?
No, not at all. Because see, while we call the unorganized market unorganized, let me tell you that with GST coming in and all the various hallmarking becoming mandatory, I wouldn't say that a large part of the market is unorganized. Everyone is getting more and more organized. Even the smaller jewelers are following the rules, and the compliance is much more. So it's not really unorganized to organized. Yes, how you call the organized is that where we are running through more stronger software systems, more professional team members. I think that's the way to look at it, where our team strength, our capital, the strength of raising money from the banks are getting much more stronger. But the smaller jewelers are also, trying to improve their, processes and systems. But this value, it is wrong to think that unorganized is catering to a very smaller segment of customers who does not have the disposable income. No, it's not the way to look at it. The gold prices have been going up. So people are, our gold exchange, which 4-5 years back was 22% of the sales, have gone up to almost 31% of the sales. Yeah. So even consumers are coming with their old gold, and it is need not be that it is old gold of Senco. It could be other jewelers' old gold also coming to us. Sure. So that is one part of the change that is happening. That why the jewelry sector against the other retail sectors have been doing well is because people need not have only the money to buy. The Indian consumers are sitting on huge quantities of gold, old gold as we call it, 24,000 tons and whatever the numbers are. Yeah. So that is a great potential for future growth for all the companies. That is number one.
Right.
Number two is that prices have gone up. People are having the faith and belief in gold as a commodity, so they are buying it. Number three is that jewelry segment is driven by wedding jewelry sales. So if you ask me, I would say that in the last 7-8 months, wedding jewelry sales have been a major driver for the growth for everyone, which means higher ticket size items. So footfalls could have gone down because prices of gold has gone up, but the ticket sizes have gone up because people are buying wedding jewelry. So that's the reason why we have seen these numbers.
Right. Mr. Sen, a final question. Actually, there's two parts to it. Firstly, your plans in the international market. And secondly, I know it's early days for lab-grown diamonds in India, but we're looking at I would say a fairly healthy, festive period and wedding season right now. What kind of traction are you witnessing here?
So the international market will have a very calibrated approach. We've opened our first store and office in Dubai, and that is with the thought and the vision that it will act as a platform to expand into your US and Europe and other parts of the world through our franchisees, partnerships, looking for collaborations. But that will happen over a period of 3 to 4 years. I'm not seeing that something drastic happening in the coming 1 year or so. We'll also keep learning, looking, but we can also see that our fellow jewelers, a lot of brands are opening and expanding rapidly in the international market. So we'll observe what they are doing, and we'll also accordingly follow over the coming 2 to 3 years. That is with international market. And as far as lab-grown diamond jewelry is concerned, we've opened 4-5 stores of lab-grown diamond jewelry. We intend to open 3 to 4 stores more. And we are looking and closely observing what the consumers are kind of wanting. The ticket sizes there is 30, 40, 50,000 rupees. So it's very much like the ticket size that we deal with. And, we are having a separate identity. We've created a separate subsidiary company, which is focusing on lab-grown diamond and other accessories like leather and perfume. So we are creating a lifestyle kind of a branding, and that's how we want to take it forward as a design house. So that's the plan with lab-grown diamond.
All right. Well, Mr. Sen, we leave it at that. Thank you so much for joining us and giving us so much more clarity with respect to the kind of strategy that you guys are going to implement going forward and the kind of expectations that we can, in fact, have from the company looking in. But on that note, we are completely out of time on this edition of KYC. Don't go anywhere. Lots more lined up. Stay tuned, and we will be right back.
तो 2025 में सेंसेक्स क्या 1 लाख छुएगा या पार करेगा?
मंगलवार को सेंसेक्स 1 लाख क्रॉस करेगा। कौन सा मंगलवार, ये मत पूछना।
2025 के लिए कोई नई थीम्स आप प्ले आउट होते हुए देख रहे हैं और जिनका ध्यान आप आकर्षित करना चाहेंगे निवेशकों के लिए, जो अभी तक किसी ने सोचे नहीं होंगे?
वैल्यूएशन। आप प्राइस इज व्हाट यू पे एंड वैल्यू इज व्हाट यू गेट। पिछले साल हमने कई स्टॉक ऐसे देखे जहां पे वैल्यूएशन महंगा था और फिर भी लोग उसे खरीदते गए। फिर जब करेक्शन आया तो वो स्टॉक 30 से 50% गिर गए।
ग्लोबल ग्रोथ की ट्रेन में भारत की कोच पोजीशन क्या होगी?
अब हम इंजन है चाइना और अमेरिका के साथ।
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target. It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals.
Hello and welcome to Hot Money. I'm Hiral Dadia and with me is Varsha Chandani. Let's quickly take a look at how markets are panning at this hour. Overall, there is some bit of weakness that we have been bracing. And from here, how the second part of the day pans out is going to be crucial because we are absolutely below the 24,250 mark already in today's session. Cuts of almost 0.4% coming in there. Let's quickly pull up Bank Nifty as well and see what's happening in terms of the banking counters. The cuts are deeper. You have Bank Nifty, which is underperforming the benchmark indices in trade with cuts of nearly 1% coming in there. Overall, if you see in terms of the advanced decline ratio, let's see what that is looking like because clearly you have almost 1,500 declines versus 680 number in terms of where advances go. So that's what the framework is looking like. But again, 32 declines on Nifty versus 18 advances. Let's see the sectoral heat map and understand where is the pressure building in because clearly it's just pharma, IT and FMCG. These are the sectors which are holding up to gains. IT, in fact, is seeing some bit of consolidation as well. And there is some bit of, money that's coming in there. But media continues to see the profit booking. Metal is down almost 1% in trade. You have the commodity section, energy, real estate. Real estate, which was on an uptrend over the last couple of trading sessions, has now started to see some bit of profit booking after the run-up, and that sector is down almost 0.6%. In terms of individual stocks, Dr. Reddy's and Cipla, both these counters, top two gainers on Nifty 50 from the pharma pack. Trent is up in trade. Wipro as well as Tata Consumers as well is seeing some good moves. On the losing end, you have BEL, JSW Steel, both down almost 2% in trade. Power Grid also seeing cuts of 2%. Tata Motors as well as ICICI Bank, both these stocks are also seeing some bit of pressure. So clearly, you have benchmarks that have continued to bleed. And from a market's perspective, the Fed outcome is something that everyone is eyeing as well. And that is probably having some bit of a bearing as well. In fact, this is the third consecutive session where we are seeing some bit of cuts that are happening in terms of where markets go and in terms of Dow Jones as well. It was the 9th consecutive session and the longest losing streak since February 1978. So some impact coming in terms of global markets. In fact, yesterday's session, FIs did see a big number in terms of the selling. I think little over 4,000 to 5,000 odd crores was the kind of sell number that we already saw. So overall, Varsha, if you go to see, pressure has continued to build in terms of where large caps and the benchmarks go. Broader markets yesterday were pretty much in tandem with the benchmarks. What is the picture looking like today?
Actually, here broader markets are also in pressure today. So if you see mid-cap 150 is down like 0.3%. Now, the losses are led by Piramal Enterprises, where there's a reason for that. Jefferies has a negative outlook on Piramal Enterprises, while NMDC, Poonawalla FinCorp, Ashok Leyland, and a lot of shipping companies like Mazgaon, Cochin are in pressure today. Well, let's talk about the gainers in mid-cap. So you have KPR Mill, Mankind Pharma. A lot of pharma companies are gaining today. Mankind Pharma yesterday came out with a fundraise of rupees 3,000 crore, and Lupin, Oro are actually seeing gains of about to 3%. While if I talk about in financial space, pretty much good outlook when it comes to financials also. But coming to small cap 250, again the losses are being led by you have PVR Inox, JBM Auto, Karur Vyasa, while gainers here include EID Parry, Radico Khaitan, Craftsman Auto, Questcorp. Like Questcorp, actually Antique has initiated a buy call with 50% upside, while K Fintech is also in gainers list on the back of Jeffrey's note. So
absolutely, in fact, a lot of other stocks also to add to your Varsha's list is Akzo Nobel. 8% is the kind of up move that we are seeing with regards to Akzo Nobel. So the paint theme with Akzo Nobel, let's pull up a Berger Paints as well as Asian Paints, Indigo. Let's see what all of them are doing in trade as well, because that's going to be an interesting theme that probably could play out from here on. If we can just have all the paint companies on the screens as we speak, because we were still with K Fintech. Apart from that, you have EID Parry also, which is seeing some smart moves in today's session. 6.5% is the kind of up move that we are seeing. Craftsman is up around 4.5%. Radico Khaitan is also up almost around 4% in trade. On the losing end, few other names. Wabag, we'll be talking about Ashapura Mindchem, NMDC, PVR Inox on the back of the F&O ban has been trading under pressure today. In fact, second consecutive session where PVR Inox is down and about in trade. So these are a few of the stocks that we're looking at, but let's quickly head across to the key themes for today. Number one, amalgamations and JVs are in focus, on the back of which we'll talk about Sanghi Industries, Penna Cement, Ambuja Cement, as well as few of the other names, which is Celicor Gadgets as well as EPAC Durable. These are stocks that will be in focus on theme one.
Right. So
on theme two, we will be talking about the China stimulus benefits, how the Indian chemical sector. Varsha will take us through all of those in today's session.
Well, right. Even we are going to talk about the stock of the day, which is Wabtec Wabag, and also order wins. We are also going to talk about the order wins that today will be in focus.
After this, the other ones are brokerages of the day. 3 brokerages, 3 stocks in focus today. On number 6, you have Corporate India's land deals that will be in focus. Whether that is to repay debt or is it an acquisition or sale of a land parcel from a real estate perspective. And you have MobiKwik that listed almost a 80-85% uptick. How does it fare against a Paytm? That's the war we are going to talk about. And SEBI clarifies on stricter norms for ODIs and FPIs. But does this really impact the Indian markets at large? That is going to be key. But first, let's welcome in our guest as well, G. Chokalingam, founder and MD at Economics Research. Welcome to the show, Mr. Chokalingam. Before I come across to you, the first key aspect that we're discussing today is with regards to amalgamations that are happening. First one, Ambuja Cement will be merging Sanghi Industries and Penna Cement with itself. Let me get in my colleague Mihika, who will tell us more as to what's happening, who benefits, and what's the advantage out of this. Mihika, over to you.
Thank you for that. I'll start up with regards to how much Ambuja Cement does have stake in the two companies. It holds 58.08% of Sanghi Industries and it fully owns Penna Cements. Now, in terms of what the deal entails for the shareholders, well, 12 shares of Ambuja will be issued for every 100 shares held in Sanghi Industries, and Ambuja will also pay 321.5 rupees per share for every 1 share of Penna Cements. Now, the deal completion is expected to happen in the next 9 to 12 months. Up next, why the merger? Well, it helps in streamlining the organizational structure and also allows for simpler compliance requirements for corporate governance. It also makes the company more competitive and efficient, and it would help increase liquidity for Sanghi Industries shareholders, which is right now a very illiquid small to mid-sized cap company. And shareholders will also benefit from the added capacity as the Adani Group takes on the consolidation theme in the cement industry. Now, as of the latest, the Ambuja Cement's consolidated capacity post the Penna as well as the Orient Cement Acquisition stands at 97 million tons per annum. It targets 104 million tons per annum operating capacity by March of 2025 and a 140 million tons per annum consolidated capacity by the end of FY28. Lastly, the combined market share and geographical strength, when you talk about Ambuja Cement, at North, the capacity shares at 24%. Central is the lowest at 8%. West is the highest at 25%. South, which is where the latest, its acquisition targets have been in, is at 24% now. And in the East, it lies at 19%.
Right, so this is going to be an interesting one to watch out for. Mr. Chokalingam, let me come to you with regards to this deal. How are you looking at it and the stocks?
Certainly, long-term outlook looks good for Ambuja Cement. Though the GDP growth has slipped down in the current and recent quarter, I'm pretty confident that FY26 onwards, we will be back to 7% growth. That should be positive for all the cement leaders, including Ambuja Cement. So therefore, one can hold. In case it corrects, one can add also. And again, this consolidation of small companies with Ambuja Cement also opens up more opportunities for the small cement space, particularly the ones which are located in South India, and also trades at a very cheaper valuation. When I say cheaper valuation, all these deals have happened at $80 to $100 per ton. So there are a couple of companies which are available at even $40, $45 per ton. So along with Ambuja Cement, I would also recommend KCP Limited, which has got a very attractive cement business, and it has got a lot of land bank near Adani Port in Chennai. So I find that as a deep value stock. Apart from suggesting Ambuja Cement, I would suggest KCP Limited.
Right. Thank you for that. But Mika, we do have other stocks which are in focus. You have likes of Cellcore Gadgets, EPAC, and also Minda Corp. So what's buzzing there?
So, Cellular Gadgets actually partnered with EPAC Durable. The company's, this was regarding its air conditioner segment, which the company launched in April 2024, and it does offer air conditioners at a nominal rate. Now, why the partnership? Well, the collaboration aims to enhance Cellular's AC portfolio, and it will leverage EPAC's Durable's advanced manufacturing capabilities and technical expertise. When you talk about what's in for Cellular, well, it helps the company become a more household name in the consumer electronic space, and it will help the company deliver reliable and locally manufactured products. EPAC will be manufacturing the Cellular branded air conditioners, and the premium ACs will feature cutting edge tech and energy efficiency. When you talk about how much the AC segment contributes to Cellular, well, the company does expect an average of 50 to 60 crores in sales growth for its AC's portfolio. And in terms of for EPAC, well, room air conditioners and components accounted for 81% of their H1 FY25 sales, and they are the second largest original design manufacturer player in the AC and small appliances space with a market share of around 24%. Lastly, just to give viewers a little bit of context, Cellular's top income or top line stood at around 425.7 crores in H1 of FY25, which posted a 46% year-on-year growth. Margins stood at 6%. It did see a 20 basis point improvement, and net profit stood at 14.6 crores, which was up 61% on an annual basis.
Thanks, Mika, for getting us the details. So that's with regards to Cellcore Gadgets and EPAC. EPAC being a bigger player. Mr. Chokalingam, how are you looking at both these counters? Cellcore, though, is a smaller, probably a SME company, but big aspirations with regards to where the consumer space goes.
I would give Cellcore on EPAC. The stock has already tripled. September results are not great, and there is a slowdown in the consumption of durables in many cities. So considering all this, I think one can use this opportunity, good news, to book profit in EPAC.
Okay, so that's with regards to where EPAC Durable goes, as well as Cellcore Gadgets. Let's just pull up a Cellcore Gadgets on the screens and see what the stock has done so far. I don't think so we have the stock right now, but EPAC has seen an interesting journey as well so far. But moving on from this theme, the third theme that we're talking about today is with regards to the chemical stocks. In fact, a good run-up is what we've seen in terms of the chemical space, and that has mainly been fueled by the hope that Chinese companies may actually stop or pause dumping into the Indian markets, as they've announced a stimulus, and this is what is expected to boost their economy. So the demand for the chemicals that they are dumping into India is going to increase in China, and that will augur well for Indian companies as well. So you have the likes of a DCM, Shriram, Gujarat Alkalis, and more. Varsha is standing by to get us more. Varsha, What would this actually mean, and how big a benefit could this be? Because today you're seeing some bit of profit booking that's coming in with regards to chemical names.
Yes, Hiral, but in last 5 days we have seen chemical stocks like Deepak Nitrite, likes of Clean Science and Navin Fluorine were actually buzzing. Now this was on the back of China announcing their stimulus plan. So what is actually happening in China? China has announced a huge stimulus plan of $1.4 trillion. Now this is to boost up their economy and also following a loose policy next year to make the borrowing easier. Now why does this matter to Indian chemical companies? One is, if China will give stimulus, a huge stimulus, that will boom up their economy, and because the demand of the chemicals in China will increase, then China will actually stop dumping those chemicals in India. So technically, in short, less competition for Indian chemical companies. But let's see what is actually China dumping. What are those important chemicals that China has been dumping? And with regards to that has been affected to our Indian chemical companies. So few of the chemicals which are actually dumped by China is, one is caustic soda. Then you have likes of acetic acid, soda ash. Actually, acetic acid has declined almost 9%, which is negative for GNFC, but positive for like the likes of Lakshmi Organics and Jubilant Pharma. Now, because acetic acid has been used raw material for this company, but GNFC has the end product acetic acid, which is again negative for that. Then if you see soda ash has declined almost 6%, which is negative for companies like Tata Chemicals. Then the toluene is actually down 3.7% month on month, which is actually negative for GNFC. So all these chemicals prices, if you see, are down, have declined month on month and year on year. The reason for this, because China has been dumping this chemical since 1.5 years, and this is the reason we are seeing the financials of Indian chemical companies go down. There's been degrowth in the revenue, there has been pressure in the margins because of all the dumping China has been doing. Now the good news is, because of this stimulus policy, and if China announces more stringent policies for Chinese economy, then the fact is that the China will stop dumping those products in India, and maybe we can see some kind of light of growth in Indian chemical companies.
Right. Thanks, Varsha, for getting us the details. So that's the chemical sector as a whole. Mr. Chokalingam, basis was what Varsha has taken us through. How are you looking at the space? Because there has been a recent run up. Today you're seeing some bit of profit booking that's coming in. What would you advise?
Yeah, very interesting insight to capture this. I just want to add only two thoughts here. One is that, still Europe is struggling on its growth. And the chemical sector in India depends on the European economy also. And second, most importantly for many of these Indian chemical companies, the caustic soda business is likely to come under tremendous pressure. A lot of companies already started making losses, and the significant improvement may not come, because in the recent Chemical Weekly conference on chemical industry, they have expressed a lot of apprehension about caustic soda, because the capacity of caustic soda industry in India is expected to go up by almost 30% next 1-2 years. So that is going to be very negative. However, it's a very interesting thing. The products you have mentioned, for example, TDI and acetic acid, yeah, I agree with you. These are all import substitutes. And China coming, announcing this stimulus would improve the local demand there. And therefore, the GNFC would be a major beneficiary of this theme. GNFC makes TDI and acetic acid. In fact, in acetic acid, it has recently announced a mega joint venture with a foreign company also. So among all these, this particular stock fits perfectly to this theme, in my view.
So, Mr. Chokalingam, one question from my side. Now, every company is actually saying that H2 FY25 will be, good for all the chemical companies. What's your view on that? Will H2 be good for the companies, or they're going to be degrowth as well, like we saw in 23 and 24?
Unfortunately, what is happening, all the chemical prices are not moving in tandem with each other. There is a mixed performance. For example, caustic soda prices have come down in the last 2-3 years substantially. But that is not the case with every product. So I do not agree that most of the chemical companies would do well in the second half. Only on a selective basis, a few companies would do. something like DCM Sriram and GNFC. These are the ones I looked at their product and recent performance. They may do better. But majority of the companies would struggle in Q3 also in the chemical sector.
Right. Thank you for that. Now moving on, let's move to the third theme that is Wagtech Wabag, which is the stock of the day as it has registered the worst fall since March 2020. Now this is after the tender for the Saudi Arabia's 300 mega seawater desalination plant was cancelled. Anushi joins us with more details. Anushi, what's the news?
Right, Varsha, we are seeing a lot of pressure on this counter today. This is after the tender for Saudi Arabia's 300 megaliters per day order which they had received, which was at the size of 2,700 crore, almost equivalent to what VA-Tech Wabag was making as of FY24 revenue, has been cancelled by the Saudi Arabia team. This was the order that they had won in September 6 and was scheduled for a completion period of 30 months. So if we look at FY24 revenue, that is 2,856 crore, FY24 revenue of 2,856 crore, and tune in this order of 2,700 crore, the execution in next 2.5 years was what was implied. So this would have led to a significant pickup, or rather a revenue growth in the companies. But so now with this being cancelled, we can see a big impact on the company's financial, which if you see the last two fiscals also have not been able to clock in that revenue growth. So what does the management say about this? Let's understand. They've said that customers were notified that all tender participants were informed that the tender stands cancelled and order is cancelled pursuant to their internal administrative procedures. The company is currently in touch with the customer to understand more in detail as to what is happening. So further clarity awaits on whether this tender would be reinstated for bids, fresh bids starting again, wherein the order size would be again recalibrated and all that. So we do have to look for more clarity on that. Let's just also see the order book positioning of the company. So order book stood at about 14,600 crore as of September 24. They did aim to close the year with an order book of about 16,000 crore. So this 2,700 crore that we are looking at is a significant reduction that we have to take in account for the order book which the company currently holds. Total inflow of 4,600 crore. Also, if we see in the first half of H1 FY25, this included this 2,700 crore figure as well. So again, what is to be watched for is management commentary on the revenue growth that it projects for the next 1 to 2 years, and what could this mean if there is any further clarity on whether they will get this, they'll be able to participate in this tender back and receive the order back. So more clarity awaits on the management side for these details.
Right, right. More clarity, of course, from this. Thank you, Anushi, for that. But Mr. Chokalingam, so the interesting thing is the order value was around 2,700 crore. That was a single order. Company did 2,800 crores of revenue in FY24. So your view on this, because this is a huge setback for the company, number one, and number two, any other picks that you have in this space?
Yeah, it's as you rightly said, it's a very big setback. Even now, it is not too late to exit the stock, because even after the correction, if you look at the valuation multiple, still highly stretched. And also one has to understand what are the reasons behind this, whether such actions by one company would affect other orders. All these one has to evaluate. So I prefer L&T. In case of L&T, you already seeing a lot of orders procured from the Middle East. Now they have to execute them. In the last 2-3 months, they have procured a lot of orders in similar business. And second most important thing is that around 40% of the consolidated profit comes from IT sector for L&T. That is an added benefit for the stock, because as we know, there is a lot of stress for the large cap stock because of FIS selling, and which is leading to depreciation of rupee, which is favoring the IT stocks. So therefore, you have got both advantages, and also the management quality of L&T is far superior, and hence I would suggest sell on Wagtech and buy L&T.
Right, sell on Wagtech and buy on L&T. Well, right. Okay, moving on. The fourth theme is order wins. Now, Inox Wind, Gensol Engineering, and Rights are the companies in focus. Anushi is back with us. Anushi, what are the key details on all the order wins that you have?
Hey Varsha, the saga of order wins that we've been covering for the past couple of days, they continue. Today we have orders coming in from Inox Wind. Firstly, I'll talk about they've received an equipment supply order for 60 megawatt from Serentica Renewables. This is for its 3 megawatt of class 1 turbines. Wind turbines. Order is for supplying the turbines within the H1 CY25 period. That's by this calendar year 2025 first half of that only they expect to supply the order that is there for the project. And this order also includes a multi-year commissioning of the O&M, operation and maintenance services, to be a part of the contract. Coming to the second one is Gensol Engineering, wherein they've secured a 22 megawatt of solar PV project worth rupees 88 crore, and this is from a leading steel project company in Punjab. Even in the recent updates, if we see, they had received another order of about 780 crore for solar PV project from Maharashtra, which now if you had just taken this one into account, the company's solar EPC order book crosses rupees 5,400 crore as of the October 24 data that we have. The last one on the list is Rights Limited, wherein they've received an order for 123 crore from Meerut Development Authority for consultancy services for a period of about 5 years. Even they've had a couple of order wins in the past, the latest one being an order of 298 crore from External Affairs Ministry. This was for construction of integrated check post, and if you look at its order book as of September end, that's about 6,581 crore. So 3 stocks in focus on the back of order wins that we are seeing in trade today.
Thank you, Anushi, for that. Mr. Chokalingam, so out of all the stocks mentioned by Anushi, which of those you like the most?
I do not have valuation comfort in Inox Wind, but I have looked at Rights and Gensol. Gensol one can hold, Rights one can even buy from the current level.
Right. Okay. Let's take time for a break. Let's take a short break. Lots of news and info on the other side.
तो 2025 में सेंसेक्स क्या 1 लाख छुएगा या पार करेगा?
मंगलवार को सेंसेक्स 1 लाख क्रॉस करेगा। कौन सा मंगलवार, ये मत पूछना।
2025 के लिए कोई नई थीम्स आप प्ले आउट होते हुए देख रहे हैं और जिनका ध्यान आप आकर्षित करना चाहेंगे निवेशकों के लिए, जो अभी तक किसी ने सोचे नहीं होंगे?
वैल्यूएशन वैल्यूएशन वैल्यूएशन। आप प्राइस इज व्हाट यू पे एंड वैल्यू इज व्हाट यू गेट। पिछले साल हमने कई स्टॉक ऐसे देखे जहां पे वैल्यूएशन महंगा था और फिर भी लोग उसे खरीदते गए। फिर जब करेक्शन आया तो वो स्टॉक 30 से 50% गिर गए।
ग्लोबल ग्रोथ की ट्रेन में भारत की कोच पोजीशन क्या होगी?
अब हम इंजन है चाइना और अमेरिका के साथ।
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target. It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers,
Welcome back. You're watching Hot Money. The pressure in terms of markets does continue. But moving to the fifth theme, the brokerages of the day. On number one, you have Jefferies that has maintained a buy rating on a K Fintech and an underperform for Piramal Enterprises. Both these stocks, if you see Piramal Enterprises under pressure, K Fintech seeing gains of 2.5%. But let's look at K Fintech first. Rucha, my colleague, joins us to tell us more. Rucha, what is Jefferies betting big on?
Hi, thank you so much. So, Jefferies has come out with a note on KFin Technologies, maintained a buy rating with a target price of 1530 versus 1140 earlier. Now, this implies a 25% upside since last close. Also, this one is the top pick in the mid-cap financial space for Jefferies. Now, talking about the domestic business, well, this domestic business is benefiting from strong capital market as well as market share gains, according to the brokerage house. This domestic business can therefore see a 15 to 20% growth in the medium term. Talking about international business, well, this one is also progressing well organically, and management is evaluating inorganic opportunities here as well. Talking about the kind of share which is coming in from international business, management is targeting about 15% revenues to come from international business from the current 7% in the next 3 to 5 years, and all of this organically is what the management is targeting. But on the inorganic side, as I rightly mentioned, management is also looking for different M&A activities. Jefferies has therefore raised its earning estimates by 2%, but it believes that valuations are still punchy at 44 times its FY27 PE ratios, but prospects from a longer term perspective, that is from a 3 to 5 years, still remain fundamentally strong, and therefore Jefferies is seeing a 25% upside and maintain its buy recommendation.
So that's a buy on K Fintech. A good upside from Jefferies, and if you see the stock performance as well, nearly 2.6 times is the kind of returns that we've seen on this counter from a long-term perspective. Mr. Chokalingam, how are you looking at this one? Because clearly expansion in terms of where the international business goes, that is going to be interesting to watch out for.
I think that is already priced in. We are talking of 44 PE for FY27. That's a long way to go. And if you look at the institutional holding, particularly foreigners holding, it's very substantial in the stock. And if you see last 1 month, many stocks where the FIs had a big considerable stake, in their selling now, some of these stocks have become a big victims. I'm not saying like KFin Tech will fall badly, but the potential risk is there when the valuation company is not there. Whenever you find such a huge institutional holding. So I would better, wait for, right opportunity in KFin technology.
Staying with brokerages, Jefferies has maintained underperform rating on Piramal Enterprises. Mika joins in with more details. Mika?
Thank you for that. So Jefferies has actually a negative outlook on Piramal Enterprises. The brokerage has maintained its underperform rating with a target price set at 820 rupees, which implies over a 30% downside potential for the stock. Now, the company's return on assets and equity is set to stay below the 1.5% and 6% mark over FY25 and FY27, and Jefferies believes that the company could see some near-term pressure on their net interest margins. Furthermore, the improvement in their return on assets and the OPEX reduction could be only gradual in nature. Now, the bearish views comes up after a management meet, and the key takeaways from what Jefferies got from the management. First of all, management expects their legacy assets under management to reduce to below 10% of their total AUMs by March 25 versus 12,000 crores as of Q2. They also expect their retail AUM growth to be moderate further, but already stay healthy at 25 to 30% in FY25. They do indicate that the lending environment has become tougher, and management has also stated that the credit cost for the growth business will inch higher in the near term.
Right. Thank you, Mika, for that. Mr. Chokkalingam, your view considering company to see some bit of pressure on net interest margins?
Yeah, I agree with Jeffrey's call. I think it's a good sell now. One has to understand the fact that within the financial services segment, the competition has got intensified in the last 3 to 5 years. So, the POC banks have consolidated. Now they are posing tough competition. You have a private sector banks like ICICI, HDFC. Now, on top of these two segments, you have got a small payment bank, small finance companies becoming a bank, even some of the cooperative banks becoming a bank, then a lot of fintech companies. Then new leaders like Poonawalla. So the whole financial service segment has expanded with many new layers of competition. On top of it, the lending for both the financial service company and banks have come down substantially in the current fiscal as compared to FY24. So considering all that, I would vertically shift down the valuation multiple for many NBFCs, including Piramal Enterprises, and therefore I would give a sell call on this.
Right, a sell call coming in with regards to Piramal Enterprises from Mr. Chokkalingam as well. But moving on, there are a couple of land deals that have happened with regards to India Inc. Let's pull up two names that we've seen. One is the Fermenta company, which is Fermenta Biotech. Strong ones gains on this counter, and they're selling their commercial office premise in Worli, Mumbai. This is for a consideration of around 40 crores. Now, real estate is one part of their business, a lot of other segments that they are present in as well. If we can just have the stock price with regards to Fermenta Biotech from a long-term perspective and see how the stock has performed. And with this, another one is Aditya Birla Real Estate. They've in fact acquired a land parcel in Boisar, and this is for around 104 odd crores. So again, this is an acquisition that's happening from a real estate perspective. How are you looking at both these counters, Mr. Chokkalingam?
Yeah, for Fermenta Biotech, 40 crore is very insignificant considering the current market cap. Yes, Aditya Birla Real Estate long term, it's a good stock to consider. If somebody wants to play on land bank in Mumbai, I may be biased because we also have invested. The only stock which I am extraordinarily bullish is Nesco, sitting on 70 acres of land bank on Goregaon Highway. And as per their presentation, almost 80% of the land, the expansion can happen. And further, they have gone into Andhra to expand the facility management related to infrastructure. So all this give me a lot of confidence, and also sitting on a huge cash of close to 1,600 crore, apart from the land bank. So that's the one stock I have been very bullish for the last 3 to 5 years.
Thank you for that. So let's move to the theme 7. The Paytm wallet war. Paytm is much ahead of MobiKwik in terms of monthly active users, revenue, and even merchant base. Harsh joins in with more details. Harsh, tell us who is ahead in what parameters and what to watch out for going forward?
Have an audio issue slightly with Harsh so far, Varsha. We will get Harsh on the details, but it's interesting to see how MobiKwik has listed in today's session. Let's just pull up a MobiKwik on the screens and see what's happening. There you go. 86 to 87% is the kind of uptick that we are seeing in terms of debut day, and that's the interesting part to watch out for in spite of Paytm being ahead on that front. Key things that we are going to watch out for over here is in terms of where the monthly active users go. MobiKwik, in fact, Paytm this year has given returns of almost 57 to 56%, though it was a downer post-listing. But what happens with MobiKwik is going to be interesting to watch out for. Overall, if you see in terms of the valuation, that is going to be an interesting aspect that Harsh is going to cover for us as well. Overall, if you see in terms of MobiKwik, it is profit making itself in FY24, right? So that's going to be an interesting part. Harsh, now that we have you, what is the war looking like between MobiKwik as well as Paytm? Because clearly a bumper listing is what we've seen, whereas Paytm was a downer in the latter part post-listing.
Well, yes, absolutely. And that's because of relative valuations actually, Hiral. So great you point that out. You know, Paytm's at that point, revenue was roughly 3,000 odd crore at the time of listing in November 2021. The stock or the valuation that they were asking for was 1.5 lakh crore. In comparison, you know, the top line of a MobiKwik is roughly 850 odd crore, and the valuation or the market cap at which they IPO'd was actually just about 2,200 crore. So stark contrast just in terms of the valuation ask. But let's compare these two because it's a very interesting play here. Let's first start off with MobiKwik in terms of monthly active users versus Paytm. 6 times larger is what Paytm is versus MobiKwik. 1.6 crore monthly active users is what MobiKwik currently has, or rather FY24 end, and Paytm has around 9 to 10 crore. That was the range with which Paytm operated pretty much through the year of FY24, so around 6 times odd. In terms of GMV, and that obviously translates to revenue, 4.7 lakh crore is the GMV that MobiKwik had in FY24 versus 18.5 lakh crore. That's 4x, nearly 4x plus. You're also looking at a merchant base of just 43 lakhs for MobiKwik versus 4 crore merchants that Paytm has on its platform, 9 times. It also cross-sells other products to merchants like sound boxes, which generate revenue as well as allows Paytm access to those merchants to give them card machines, etc., which helps with regard to financial services and revenue. Overall, you're looking at top line, therefore, of 875 crores for MobiKwik, even though Q1 has been very strong for MobiKwik. So we'll have to factor in very strong growth in FY25 versus 10,000 crore for Paytm, where growth is largely going to be muted this year given all that's been happening on the regulatory front. 11 times more on the revenue count is Paytm versus MobiKwik. That might shrink by a sharp margin in this year, likely. EBITDA margin 4% for MobiKwik versus negative 9% for Paytm. I'm not looking at contribution margin, I'm not looking at adjusted EBITDA, I'm looking at pure EBITDA. This is the FY24 EBITDA number. Market cap currently, you're looking at 3,900 crore of market cap as of right now for MobiKwik versus 65,000 crore for Paytm. 16 times larger Paytm in terms of market cap, and that just goes to show that if top line were to shrink, top line difference were to shrink 11 times currently, were to shrink sharply, then you will well see price to sales also shrink for MobiKwik versus Paytm. Paytm currently at 6.5 times will largely be stable, but MobiKwik at roughly currently at 4.5 times price to sales. That may shrink given that you will see very, very strong growth on the top line. Currently trading at 280 times price to earnings, nearly, is MobiKwik. Paytm, of course, doesn't have any profit, and therefore P metric won't really work there.
Right. Thank you, Harsh, for the details. Mr. Chokalingam, now we've seen good listing in MobiKwik. Now, should investors still buy? Is valuation still attractive?
Yeah. valuation is not attractive because there is no positive bottom line for Paytm. As your colleague said, 280 times for other stock. But still, we are all traditional, analysts. If we say sell also, the stock may go up because a lot of youngsters like, these kind of new age digital business. So therefore, I would say that those who are willing to take, some kind of high risk and who look for a quick return, I mean, the Paytm could be sell and MobiKwik could be a buy. But personally, I do not initiate, buy recommendation on any of these new age companies.
Right, that's going to be an interesting take, Mr. Tokalingam, that we are watching out for. But moving on, you have Vishal Mega Mart that has delivered a stellar listing. Let's just pull up the stock on the screens. There you go. 40% is the up move that we are seeing currently. An interesting stock to watch out for amongst the three that listed today. Let's in fact head across to Gunender Kapoor, MD and CEO of Vishal Mega Mart. Gunender, firstly, congratulations on the spectacular listing.
Thank you very much indeed. And if you just give me a second, I would like to take this opportunity to thank all the investors who joined the Vishal family today. We are deeply grateful to them and welcome them into our family.
On the back of the thanks that you've given to the investors, I would like to take an opportunity to ask you, hopefully these listing gains continue from a business perspective as well for the viewers.
Just to share with you some numbers, over the last 3 years, we've delivered 26% CAGR on our revenue, 25% CAGR approximately on our EBITDA, and 50.9% CAGR on our PAT. And so we have a good track record and we are very optimistic about the future as well.
So Gunender, one question I have over here is, in terms of the numbers that you just spoke about right now, is that something that will continue or you're expecting something better than that as well if you have to look at the next 3 years?
I won't be able to give any specific guidance, but as I mentioned, we are very optimistic about the future. And I can only add one more point, that even in the first half of this year, we've had a revenue growth of 19% and a same-store sales growth of 12.5%.
So in terms of the growth, your concentration comes in specifically with regards to North India. East India, South India, West India, all of them probably total up to what comes from North. Is there going to be a change in strategy on that front now, taking into consideration the expansion plans?
So I would submit to you that we are present in every state and very concentrated in North and East. We are at the moment expanding into South. As we speak, we have a very large number of stores in Karnataka, Andhra Pradesh and Telangana, and we are expanding into Kerala. After that, there would be just one state left for us to cover in South, which is Tamil Nadu. If we come to West, we are currently present in Rajasthan and we have a very deep and strong presence there. And the two states which are left for us to cover are Gujarat and Maharashtra. So if you look at the country, we are expanding into Kerala, and then there are 3 more states where we have to expand, and we hope that that will happen in the near future.
Apart from that, Gunender, asset-light model is the way for you, right? Now, taking that into consideration, how are you able to maintain, the quality aspect in terms of the products, because you're absolutely reliant on third-party vendors?
So, like most other retailers, we also source from third-party long-term vendors. And we work with some of the very best quality vendors across all our businesses. And all the work regarding quality and product development is done jointly with the vendors. We are very proud of the quality of products that we sell to our customers. In fact, we believe that our customers deserve the very best quality because they spend a significant part of their discretionary income at our store. So it makes it our responsibility to be extra careful and focused on the quality, and we take that very seriously. But I would submit to you that most of the retail companies work with third-party vendors because we have a very wide and large range of SKUs across clothing and general merchandise and FMCG.
Right. Overall, if you see from a business perspective, let's say from today, what's the milestone or what's the next milestone that as a company that you want to achieve?
Sorry, as a target that we wish to achieve, I won't be able to give you a specific number there, but as you saw in the first half of this year also, we've continued our growth journey. We've achieved double-digit same-store sales growth, and I must quickly add, this has happened across all our three businesses: clothing, general merchandise, and FMCG. And based on this experience, we remain optimistic about the future.
Yeah. And overall, from a consumption perspective, you are seeing some bit of weakness across, right? What would you have to say? Because rural, the recovery is probably slightly coming in. Urban absolutely is a downer right now. So what is your take?
So we've seen some softness in demand. And it's been, I can only say that it's been there. And we've seen the GDP numbers, of course, for the last quarter, which to some extent confirm that. But as I mentioned, we've continued to grow our business at double-digit same-store sales growth. So yes, we are constantly monitoring the challenges that our consumers and customers face, and fine-tuning our offering to them to ensure that our products, while very aspirational, remain affordable for our customers.
So that's going to be an interesting journey to watch out for from here as well. So that's a 39 to 40% upside. Thank you so much, Guninder, for joining us on the show, and congratulations once again for the stellar listing. And probably investors are in for an upside from here on, taking into consideration the growth aspects that Guninder has mentioned so far. So that's with regards to the consumption space. But moving on, my colleague Niyati Bora caught up with Nilesh Shah of Kotak Mahindra AMC and asked him about his outlook on markets for 2025 and his takeaways from 2024. Let's listen into a snippet of this exclusive conversation, and you can catch the entire discussion today at 6 p.m. on NDTV Profit. Let's listen in.
एकदम सिंपल भाषा में कहे, बाकी लोगों ने सेल्फ गोल किए, हमने नहीं किए। रशिया यूक्रेन में उलझा हुआ है, ब्राज़ील कम्युनिस्ट पॉलिसीज़ फॉलो कर रहा है, साउथ अफ्रीका सोशल स्ट्राइफ में है, चाइना स्लो हो रहा है, एजिंग हो रहा है। ये सारे माहौल के अंदर हम अपनी ग्रोथ की गाड़ी के ऊपर आगे बढ़ रहे हैं। इलेक्शन का साल था, लोगों ने सही तरीके से नतीजे दिए, तो एक कंटिन्यूटी भी बनी रही। हमारे आसपास के नेबरहुड में देखिए, एक के बाद एक कंट्री किस तरह से तबाह हो रहे हैं, उसके बीच में अपनी गाड़ी तो अच्छी चल रही है।
तो मार्केट के लिहाज से सर क्या सबसे अच्छा परफॉर्म किया आपके अकॉर्डिंग?
एसेंशियली एक साल का व्यू लेना सही नहीं होगा। बहुत स्टॉकों ने अच्छा रिटर्न दिया, कुछ ने खराब भी दिया, बट आपके पोर्टफोलियो में सालाना क्या हुआ वो मत देखिए। आपने 5 साल 10 साल के लिए निवेश किया है तो उतनी होराइजन साथ में रखिए।
सर, आपने कहा कि आने वाला साल टेस्ट मैच होगा, ऐसा क्यों कह रहे हैं आप? व्हाट आर यू सीइंग फॉर द अपकमिंग ईयर?
पिछले 5 साल T20 जैसे थे। स्मॉल एंड मिड कैप में तकरीबन पिछले 5 सालों में 27-28% रिटर्न निकला, लार्ज कैप में 16-17% निकला। तो लोगों की उम्मीदें बहुत बढ़ गई हैं। अब उन्हें लगता है 25-30% रिटर्न तो मिलना ही चाहिए। हमें नहीं लगता कि उस प्रकार का रिटर्न अब पॉसिबल है। यहाँ से महंगाई का दर कम हुआ है तो जाहिर है कि नॉमिनल रिटर्न भी कम होगा। वैल्यूएशन फेयर वैल्यू के आसपास है। तो अब T20 के चौके छक्के की जगह पे टेस्ट मैच के 1-1, 2-2 रन लेने का समय आ गया है।
और विन करेंगे
हम तो जरूर जीतेंगे, लेकिन निवेशक जीतेगा कि नहीं उसके ऊपर हमें सोचना चाहिए। जो ट्रेडर है, हो सकता है कि 100 सुनार की एक लुहार जैसा उनका हाल हो, 100 बार प्रॉफिट करेंगे ऑप्शंस ट्रेडिंग में, वैसे वो भी मुश्किल है। बट जब एक झटका लगेगा तो सारा पैसा निकल जाएगा। तो मार्केट चलेगी, निवेशक पैसा बनाएगा, ट्रेडर पैसा बनाएगा कि नहीं बनाएगा ये कहना मुश्किल है।
सर हर साल कोई थीम प्ले करती है, कभी आप कंजम्पशन प्ले होता है, कभी केपेक्स इंफ्रास्ट्रक्चर का प्ले होता है। 2025 के लिए कोई नई थीम्स आप प्ले आउट होते हुए देख रहे हैं और जिनका ध्यान आप आकर्षित करना चाहेंगे निवेशकों के लिए जो अभी तक किसी ने सोचे नहीं होंगे?
सो वैल्यूएशन आप प्राइस इज व्हाट यू पे एंड वैल्यू इज व्हाट यू गेट। पिछले साल हमने कई स्टॉक ऐसे देखे जहाँ पे वैल्यूएशन महंगा था और फिर भी लोग उसे खरीदते गए। फिर जब करेक्शन आया तो वो स्टॉक 30 से 50% गिर गए। तो पिछले साल की तरह अगले साल भी वैल्यूएशन के ऊपर ध्यान देना, मोमेंटम के ऊपर नहीं। कल चला इसलिए आज चलेगा इसकी कोई गारंटी नहीं है, बट सस्ता है इसलिए खरीदा है तो आज नहीं तो कल वो चलेगा।
सर तो कुछ सनराइज सेक्टर्स या आपने कहा कि प्रमोटर्स के ऊपर ध्यान रख करके आप निवेश करिए, कोई ऐसी थीम्स या कुछ ऐसे सेक्टर्स आप देख रहे हैं जो कि आगे चलेंगे अभी?
सो अलग अलग सेक्टर्स है। भारत खुद एक राइजिंग टाइड है, यहाँ पे जो भी बोट है सब अपने आप ऊपर आ जाएगी। इंश्योर करना कि आप ऐसी बोट में नहीं बैठे जहाँ पे छेद है, जहाँ पे होल है। India itself is a great story, and within that many sectors will do well. But let me just take one sector for example. The world is moving towards automation and robotics, and today we don't have technology कि हम खुद अपने robots बना पाए. But every robots requires engineering components, precision parts, and we have capability to make those precision parts. So any company which is going towards manufacturing of precision parts, engineering parts for robotics will be at similar level where IT companies were in late 90s, early 2000, where generic pharma companies were 2 decades back. This is a huge opportunity, and precision engineering companies making components for robotics could be a one good sector to look at.
सर तो इसमें AI का कितने बड़ी भूमिका होगी? या क्या हम तैयार हैं उस चीज़ के लिए अभी?
AI में हम उतने पीछे नहीं है जितना इंडस्ट्रियल रिवॉल्यूशन में थे। जब 18वीं सदी में इंडस्ट्रियल रिवॉल्यूशन आया तब तक हम अंग्रेज के गुलाम थे, और उन्होंने कभी वो इंडस्ट्रियल रिवॉल्यूशन का हमारे वहाँ पे उस तरह आने नहीं दिया। 200 साल में हमारी ग्रोथ रेट 0 थी। जब अंग्रेज आए तब हम जहाँ पे थे वहीं पे उनके जाने के बाद भी रुके हुए थे। 200 साल तक इंडस्ट्रियल रिवॉल्यूशन मिस किया। डिजिटल रिवॉल्यूशन में हम उस तरह पीछे नहीं हैं, हम अमेरिका और चाइना की तरह आगे भी नहीं हैं, बट इंडस्ट्रियल रिवॉल्यूशन की तरह पीछे भी नहीं हैं। हम अपनी AI ML टेक्नोलॉजी डेवलप कर रहे हैं। हो सकता है कि हमें इसमें और निवेश करने की ज़रूरत हो, बट अमेरिका और चाइना छोड़ के दूसरे देशों के सामने दुनिया के हम रीजनेबल कंपटीशन में हैं।
तो 2025 में सेंसेक्स क्या 1 लाख छुएगा या पार करेगा?
मंगलवार को सेंसेक्स 1 लाख क्रॉस करेगा। कौन सा मंगलवार ये मत पूछना।
2025 के लिए कोई नई थीम्स आप प्ले आउट होते हुए देख रहे हैं और जिनका ध्यान आप आकर्षित करना चाहेंगे निवेशकों के लिए जो अभी तक किसी ने सोचे नहीं होंगे?
वैल्यूएशन। आप प्राइस इज व्हाट यू पे एंड वैल्यू इज व्हाट यू गेट। पिछले साल हमने कई स्टॉक ऐसे देखे जहाँ पे वैल्यूएशन महंगा था और फिर भी लोग उसे खरीदते गए। फिर जब करेक्शन आया तो वो स्टॉक 30 से 50% गिर गए।
ग्लोबल ग्रोथ की ट्रेन में भारत की कोच पोजीशन क्या होगी?
अब हम इंजन है चाइना और अमेरिका के साथ।
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target. It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape.
Benchmarks extend losses at noon for third session, led by losses in heavyweight banks like HDFC and ICICI. Nifty below 24,200, Sensex above 80,100, broader markets also underperform. All sectoral indices barring IT and pharma trade with cuts. Media index lags the most, followed by PSU banks. And the Dalal Street is buzzing with 3 blockbuster debut new entrants. Vishal Mega Mart lists at 33% premium, whereas MobiKwik debuts at 58% premium. Sai Life Science lists at a premium of 18%. Sanghi Cement cracks further on news that Ambuja Cement will merge the company and Penna Cement within itself, making way for consolidation. Meanwhile, RBI has lifted restrictions on Edelweiss companies. In a mega exclusive, the Edelweiss company's group co-founder Rashesh Shah tells NDTV Profit that such instances make the company stronger. Well, hello and welcome to NDTV Profit. My name is Rucha Somaya and you're watching Market IQ. But before moving on, let's have a quick look at the markets. It's a bleeding day for the markets. Nifty 50 down in the red by 0.6%, followed by Sensex, but still above 80,100. Nifty IT is the only one which is doing good in trade, but largely at flattish levels since yesterday's close. Nifty banking doing the worst, down about 1.2%. But let's have a quick look at the constituents of Nifty 50 index. As we can have a look, we'll see down in the red we have BEL, followed by Tata Motors, JSW Steel, and NTPC. Here we go. We have heavy names like HDFC, ICICI, L&T, and Tata Motors weighing down on the index. But in the green, we largely have pharma names, Dr. Reddy's, Cipla, doing well in trade. We have Trent also, which is contributing about 7 points towards the positive of the index. Let's move on to talking about constituents of Bank Nifty. This one is also bleeding in trade, losses are actually led by Federal Bank, PNB, Bank of Baroda, and it is only IDFC First Bank, as we can see on our screens, which is up around 2.5% in trade today. Nifty IT, well, is doing well. If we can pull up the constituents, we'll see that most of the, actually it's a 50-50 kind of ratio over here. Most of the mid-cap names are down in the red. LTI Mindtree followed by LTTS, Emphasis and Persistent. Infi is marginally in the red. Well, big names like Wipro, HCL Technologies, Coforge, which has done really well in the calendar year 24, is also up in the green. But if we can quickly pull up the advance and decline ratio of the market today, we'll see that the market is skewed towards the declines. Here we go. Declines of around 1627, advances just about 500 over here. And if you can then move on to a few stocks which are buzzing on the back of news, we have V8 Tech Bag, which is down about 11% after the tender order of 2,700 crore has been cancelled for the company. Remember, the revenue itself is at about 2,600 crore for the company. So there is a big thumbs down for V8 Tech Bag. But some positive news are around Sonata Software, which is launched in AI power testing automation, but the stock is not doing well in trade because it is down about 1.2%. Another stocks which I want to highlight are Edelweiss Financial Services, where RBI have lifted restrictions, but still the stock is not doing well in trade. It is down about 3%, even though the news are positive for the company. Lastly, I would want to highlight LIC Housing Finance. Citi retains buy with 40% upside, down about 1.5%. Lastly, some of the few recent listed names: Vishal Mega Mart, which was an 8,000 crore issue, listed at a premium of around 33% on the NSE. As we can see, yes, up 41%. A stellar debut is what we can see over here, followed by Sai Life Sciences, 3,000 crore issue size over here. This one is also doing well in trade. And lastly, One Mobile Systems listed at around 60% premium to the issue price. The issue was about 572 crore, largely via fresh issue. Well, yes, 85% up is what we can see on the MobiKwik. So, pretty happy day for the newly listed names. But let's shift focus to V8 Tech Bag, which is down about 11%. Just months after the company secured a massive contract worth 2,700 crore rupees from Saudi Arabia, the tender has been unexpectedly cancelled. My colleague Anushi joins in with more details on this one. Anushi, over to you.
I'll just give the size and how important this was for the company. So we'll break down the whole order for the company. Now, the order was from Saudi Water Authority for about 2,700 crore, and this was for a 300 MLD mega seawater desalination plant in Saudi Arabia. What has happened is now this tender stands cancelled, with customer notifying that all tender participants said that tender stands cancelled due to their internal administrative procedures. Company is currently trying to get in touch with the customer to understand more in detail as to what is the future of this development which is to take place. So a lot more clarity awaits for this. But if we take the order value in size, is kind of a significant order that we're looking at. 2,700 crore. FY24, the revenue was almost at that size, and this was to be executed in the next 2.5 years. So a strong growth opportunity for the business when it was supposed to be executed in the next 2.5 years. Order book also stood at about 40,600 crore as of September end. So of this, if we take the deduct the 2,700 crore figure, it is a substantial hit that we are looking in terms of the order value for the company. Do note that in the last 3 years also, if we look at Vartech's order revenue growth figures, we've not seen a substantial amount of growth. In fact, in the last 2 fiscals, we've seen a downtick in terms of where the revenue growth is concerned. So this could have been potentially a big beneficiary for the company, leading to a higher revenue growth. So more clarity awaits on what is the future for this order, whether this would be back on cards for the business again or not. So this is what is happening in V8 Tech. The stock is down around 17% as a result of this.
Right, very well said, Anushi. But the stock has given healthy returns, about 158% over the last 1 year. But let's shift focus to SEBI, that is the Securities and Exchange Board of India, which has clarified on rules prohibiting foreign investors from issuing offshore derivative instruments or ODIs with derivatives as underlying instruments. We have Charu who joins it with more details.
Hi, so the market regulator, Securities and Exchange Board of India, this morning came out with a release that clarified that the FPIs are not allowed to issue ODIs only when there are underlying derivatives with them. Now, the SEBI has also clarified that currently there are no ODIs with underlying derivatives. Earlier, there was a consultation paper yesterday evening that spoke about, making certain granular disclosures about offshore derivatives regarding the economic interest, ownership and other such details to keep them at par with FPIs in general. Now after media reports were circulated on that circular, it was claimed that SEBI had sort of stopped FPIs from issuing ODIs altogether. However, now the regulator has clarified that that is not the case. They had only barred FPIs from issuing ODIs with underlying derivatives, and currently there are no really any ODIs with underlying derivatives, so the reports are not having any substance to be out and claiming such things.
Right. Okay, thanks for that, Charu. Well, in fact, we spoke to Sandeep Parekh about how this decision will actually impact the markets. Listen into the slice of the conversation.
It will be cumbersome. So if you remember a few months back, SEBI kind of put in the, again, it's probably around August or something like that. SEBI kind of brought in all these norms saying that FPIs which invest in kind of narrow-based, to only 2 or 3 stocks, have to disclose the last human being or the last, like we always call it, the beneficial owner, ultimate beneficial owner. So yesterday they've extended that requirement to not just to equities, cash equities, but also to ODI positions, which means, it will have an impact on at least some FPIs who will either they're able to comply with it, or if they're not able to comply, they'll have to shut that specific fund in India. So it will be a negative for the overall market.
Well, stay with us, Charu. We understand that crypto regulations are in the works, and the exchanges may be regulated in the GIFT City as well. Tell us about that one, Charu.
So the IFSCA, which is the main authority in the GIFT City, which is a special trading zone in India, had earlier in the month of September last year come out with a committee, digital tokenization committee, which was supposed to sort of submit a report which would have later formed the basis for regulations for any assets such as cryptocurrencies and other assets as well that could work on the technology of tokenization. Now, as per some sources that spoke to NDTV Profit, IFSCA is going to be the main authority dealing with these, and the regulations could come out after the report is out, which is slated to happen in the early few months of 2025. Now, there is also an expectation that once this method for listing crypto exchanges and working with cryptocurrency as an assets in GIFT City takes place, the model could be followed domestically by Indian domestic regulators as well. Now, Indian domestic regulators include SEBI, RBI, IRDA and others, and once the model is out in GIFT City, there is an expectation that this could happen domestically, so that the investors in India could also take benefit from these. So let's see how that rolls out.
All right, thanks for staying with us, Charu, and all those detailed information. But on to a big NDTV Profit exclusive now. In relief for Edelweiss Group, the RBI has lifted restrictions on its companies. My colleague Neeraj Shah spoke to the chairman directly, Rashesh Shah, on whether he anticipated this removal of restrictions earlier and whether this impact is likely to have on both the companies or not. Let's listen into the slice of the conversation.
I think since the day the order came, we worked very hard because a large part of the order was strengthening systems and processes and all that. And especially in our financial system, there is the spirit of the law and the actual rules and regulation. So understanding, and our idea is that we should follow both the actual law and the spirit of the law. So it takes a lot more consultation. RBI has been very proactive, has been very positive in giving us advice, guidance. But I think a large part of the work was strengthening systems and processes and frameworks and all that. Because I think as we've been growing, So we have strengthened that. I think the team worked very hard. So it's always very gratifying that the work has paid off. We have been able to, convince RBI that our systems have become stronger, and always good to get back to business. I think it was a pause, but I also believe that sometimes in hindsight, the pause can also make you stronger because you are taking a little bit of a time off to make yourself stronger. And that is how our management teams have used this last few months on that. So I'm happy. I think we'll start 2025 on the growth journey again in those businesses.
Well, with that, let's move on to Caffeine Technologies. Jefferies has maintained a buy rating on the stock. Well, it has also given it a target price of 1530 rupees, implying an upside of about 20%. It also states that this is the top pick in the mid-cap financial space. Now, talking about domestic business, it expects that the company will benefit strongly because of strong capital markets as well as market share gains acquired by Caffeine Technologies, and therefore sees about 15 to 20% growth at least in the medium term. Talking about international business, management is evaluating the inorganic opportunities over there and also looking out for M&A activities. But talking about the organic expansion, well, international business is also progressing well organically, and the target is to raise the share of international revenue from currently 7% to 15% over the next 3 to 5 years, specifically from the organic side of it. Therefore, the brokerage house has raised earnings estimates by about 2%. Talking about valuations, valuations are a little punchy is what Jefferies says, because it has valued the company at 44 times its FY27 PE ratio. But for a longer term, the prospects are pretty strong from a 3 to 5 years perspective. If you can pull up the chart of Caffeine Technologies, where it has given very healthy returns over the last 6 months as well as over the last 1 year, up about 40% over the last 6 months is what we could say. Yes, here we go, about 77% actually over the last 6 months and 150% over the last 12 months. But let's move on to another stock that has been buzzing today. This is Sanghi Cement and Ambuja Cement. The board on Tuesday approved the merger of the company with Penna Cement through separate schemes of arrangement. My colleague Mihika, who tracks this sector closely, brings in with more details.
Now, I'll start off with regards to how much Ambuja Cement does have stake in the two companies. It holds 58.08% of Sanghi Industries and it fully owns Penna Cements. Now, in terms of what the deal entails for the shareholders, well, 12 shares of Ambuja will be issued for every 100 shares held in Sanghi Industries, and Ambuja will also pay 321.5 rupees per share for every 1 share of Penna Cements. Now, the deal completion is expected to happen in the next 9 to 12 months. Up next, why the merger? Well, it helps in streamlining the organizational structure and also allows for simpler compliance requirements for corporate governance. It also makes the company more competitive and efficient, and it would help increase liquidity for Sanghi Industries shareholders, which is right now a very illiquid small to mid-sized cap company. And shareholders will also benefit from the added capacity as the Adani Group takes on the consolidation theme in the cement industry. Now, as of the latest, the Ambuja Cement's consolidated capacity post the Penna as well as the Orient Cement acquisition stands at 97 million tons per annum. It targets 104 million tons per annum operating capacity by March of 2025 and a 140 million tons per annum consolidated capacity by the end of FY28. Lastly, the combined market share and geographical strength, when you talk about Ambuja Cement, at North, the capacity shares at 24%. Central is the lowest at 8%. West is the highest at 25%. South, which is where the latest, its acquisition targets have been in, is at 24% now. And in the East, it lies at 19%.
Right, thanks for that, Mihika. But let's shift focus to chemical pack. Well, this one has seen significant gains, largely fueled by the hopes that Chinese companies may pause dumping into India as announced by the stimulus, which was expected to boost the economy. Varsha brings us more on how this can benefit Indian IT companies. Varsha, tell us more about this. What is aiding this move and what is important for Indian IT companies about this?
Well, thank you, Ruja, for that. But today actually chemical companies, so there's been profit booking destocking going on in chemical companies. But if you see the last few sessions, the likes of Clean Science, your Deepak Nitrite and Navin Fluorine were all up. Now this is on the back of China announcing their stimulus plan. So what is exactly happening in China? That China has approved $1.4 trillion of economic stimulus to help their economy grow, and also following a loose policy next year to make borrowing easier. Now, why does this matter to Indian chemical companies? Because if China is giving stimulus, then the demand in China will increase, and because of that, China will stop dumping the chemicals that it has been doing since long. So technically, this means low competition to Indian chemical companies. But let's see, what exactly is China dumping? What are those chemicals that China is dumping? So starting with caustic soda, you have acetic acid, then you have soda ash, and a lot of all the other chemicals that China is been dumping. So if you see the month-on-month price for these chemicals, so if you see acetic acid is actually down 9%, which is bad for GNFC but good for Lakshmi Organics and Jubilant Ingrevia, because they use this as a raw material. But look at the soda ash prices is down 6% month on month, and of course year on year and quarter on quarter the prices are also down because China has been dumping so much. Now if soda ash is down 6%, that will actually impact the realization of Tata Chemicals, because Tata Chemicals sells soda ash. Then you have phenol, which is down 5.6% month on month, negative for Deepak Nitrite, because Deepak Nitrite sells phenol. If the prices are low, that means the revenue for this phenol will be low for Deepak Nitrite, hence affecting the financials. And we have seen in a lot of chemical companies, the financials of these companies have degrown. The margins are under pressure because China has been dumping a lot in India since last 1.5 years. Now, the good news is, if there would be more policy announcement by China, maybe all this negative prices or all this decline in prices may turn positive, and we may see the prices of these chemical companies to go up and may benefit Indian chemical companies. But this is all on news right now, it's all on paper. We need to wait and watch what exactly stimulus China will announce for FY25.
Well, of course, that has to be waited and watched. But thanks for that detailed analysis along with the stock impact. Very interesting, Varsha. But let's move on to what is really doing well in the trade. The Dalal Street is buzzing with 3 blockbuster debut. New entrants such as Vishal Mega Mart, which listed at about 33% premium. We also have MobiKwik, which made its debut at Dalal Street at 58% premium. Sai Life lists at a premium of 18%. And all of these stocks, as you can see on your screens right now, well, these are the only ones which are in the green today. Well, the market on a broad level as well as on the benchmark level is not doing really well. But NDTV Profit has been speaking to management of each of these newly listed companies to get you updates on how they plan to utilize their proceeds, their outlook ahead, and much more with that. Well, let's start with what Sai Life Sciences had to say first.
I think not want to get the specifics, Varsha, but I think a decent growth rate is expected, primarily because of the tailwinds that Krishna just mentioned. And I think what we have done over the period last 3-4 years is to primarily invest on technologies and capabilities. We believe that will help us grow on a sustainable basis, and not just on revenue, but also on the profitability. That's the whole objective, and that's really what we are focused on doing.
But Varsha, if I just have to put in perspective, we have to look at the global opportunity before we comment on our growth per se. If you just look at the size of the Chinese CRO ecosystem vis-a-vis India is probably 5% of the total scale of China. So if you just factor that number, I think the growth projection in the industry by and large are significant. What pace they're likely to grow is hard to kind of fathom, but the opportunity itself is very large, which will lend itself for exponential growth going forward. If you just look at the size of the market we're going at.
At MobiKwik, we have achieved a milestone after 15 years. We wanted to get listed, and today we have achieved that. In terms of, I think, the process, we knew that MobiKwik as a company, we have done extremely well. We have survived many difficult situations, and we have faced a lot of competition with very less capital also. So the first thing that we wanted to do when we want to get listed is to make sure that the company as a MobiKwik can keep growing in the fintech space for the next 5 years, 10 years, 20 years. Because I am a very firm believer that fintech in India is here to stay, and fintech is going to make a huge impact in the lives of everyone in India. And from that perspective, not just promoters as I and Upasna, but all shareholders of MobiKwik decided that we should first get listed, and for that the company should raise capital rather than anybody selling the shares, because everybody is long on MobiKwik.
Well, with that, let's move on to talking about a legendary cricket player who has announced his exit. Cricketer Ravichandran Ashwin says that he will retire from international cricket. He also announced his retirement after the third test match, which ended in a draw against Australia. Ashwin was the second highest wicket taker for India in test matches, having 537 wickets in bag while playing 106 games. We have NDTV's Sejal Gupta joining us right now. Sejal, what do you have on this? Please let us know.
Yes, that's right. Spinner Ravichandran Ashwin announced a surprise retirement from international cricket. This comes at the end of the Brisbane Test that India was playing against Australia. Ashwin had featured in the second Test in Adelaide. So talking about his illustrious Test career, Ravichandran Ashwin has played 106 matches and he has taken 37 5-wickets haul, which is also the most by an Indian bowler. He has taken 8 10-wicket hauls and has taken a total of 537 wickets. His bowling average stands at 24. Talking about his all-round batting skills, he has scored over 3,500 runs with a batting average of 27.75. Remember, Ashwin has also scored 6 test centuries and has 14 test 50s to his name. He has taken over 700 international wickets and was the quickest to take 350 international test wickets. He has played 116 ODI matches and has taken 156 wickets, and has played 65 T20I matches and has taken 72 wickets. So Ashwin drew curtains to his 14-year-long illustrious career and has finished as India's second highest wicket taker, second only to Anil Kumble. While talking about his ability as a spinner, he's made the spinning tracks in India virtually unplayable. And remember, he has also won a record 11 Player of the Series awards. He was also part of the 2011 World Cup winning team and played a key role in the 2013 Champions Trophy. Remember, his performance in limited overs were commendable, but in the test it was in the test arena that he really shone. Not to forget that he will be playing IPL with the Chennai Super Kings in the upcoming season.
Right, thank you so much for that, Sejal, but that would definitely be a disappointment for many cricket fans. But due to crunch of time, that's all that we have on the show for now. From myself and the team members who have put this show together, thank you very much for watching.
तो 2025 में सेंसेक्स क्या 1 लाख छुएगा या पार करेगा?
मंगलवार को सेंसेक्स 1 लाख क्रॉस करेगा। कौन सा मंगलवार, ये मत पूछना।
2025 के लिए कोई नई थीम्स आप प्ले आउट होते हुए देख रहे हैं और जिनका ध्यान आप आकर्षित करना चाहेंगे निवेशकों के लिए, जो अभी तक किसी ने सोचे नहीं होंगे?
वैल्यूएशन, वैल्यूएशन, वैल्यूएशन। आप प्राइस इज व्हाट यू पे एंड वैल्यू इज व्हाट यू गेट। पिछले साल हमने कई स्टॉक ऐसे देखे जहां पे वैल्यूएशन महंगा था और फिर भी लोग उसे खरीदते गए। फिर जब करेक्शन आया तो वो स्टॉक 30 से 50% गिर गए।
ग्लोबल ग्रोथ की ट्रेन में भारत की कोच पोजीशन क्या होगी?
अब हम इंजन है चाइना और अमेरिका के साथ।
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target. It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve. Hi, thanks so much for joining in. You're watching the Mutual Fund Show on NDTV Profit, and my name is Alex Matthew. This show gets you actionable insight on everything mutual fund related. Now, on today's show, we're discussing a category that we don't often talk about. It's an interesting one, or actually two, and they're quite similar. So the question is, how do you differentiate between the two, and how do you make a selection? If you look at the classification that the SEBI has on mutual funds, the categorization of mutual funds, you will see that there is a separate category for contra funds and there's a separate category for value funds. I'm just reading out the definition here. Equity funds may be categorized based on valuation parameters adopted in stock selection, such as growth funds identify momentum stocks that are expected to perform better than the market, etc., etc. And you have contra funds, where contra funds are equity mutual fund schemes that take a contrarian view on the market. But if you actually think about it, in value, you're buying stocks that are trading lower than traditional valuations, and they're out of favor usually. So you're effectively taking a contrarian view. Both of those have to have a minimum, the same amount rather, actually 65% invested in stocks. The rest is up to the fund manager's discretion, and that's the only restriction that they have. Let's talk about this in more detail because I found it fascinating. Mohit Gang is the co-founder and chief executive officer of Moneyfront, and Kshitij Mahajan is the managing partner and chief executive officer of Complete Circle Wealth Solutions. Gentlemen, thanks so much for taking the time. Pleasure having you on the program. Kshitij, I'll start with you. Do people come to you asking what the difference is, or is that only me?
Well, good afternoon, Alex. Good afternoon, Mohit. Always a pleasure with both of you on the show. So yes, you'll be surprised that there's a lot of confusion about these two strategies which goes around. And normally, the tendency is to just get into a fund which is showing a good past performance. But I think both these strategies are very different from each other as we speak. So as we say value, obviously it as the name says, it looks for those companies, businesses which are trading below its intrinsic value or on the price to earning metrics in a simple way, vis-a-vis their earning number, the PE looks much lucrative vis-a-vis the earning what these companies are showing. So that's what value is, where you buy undervalued stocks and then hold on to this. This is less riskier vis-a-vis any growth strategy on a risk parameter, and obviously vis-a-vis contrarian strategies which we do. Wherein the contra fund, where we talk, contra is totally a call which we take on a sector or a cyclical stock or a sector which is right now not doing well. So, for example, during dot-com burst in 2001, somebody is taking a call on IT sector. Between 2016 to 18-20, somebody is taking a call on a PSU bank. So I think that is something which takes a call, which is a contrarian view. I remember we used to play contra, but it's a contrarian view. That's what fund manager takes a call that yes, this sector or this sector is not doing well. And eventually this will come up the curve because of government policies or turnaround or whatever, and then you buy that company and then you wait for the right time. But this is a little more riskier vis-a-vis growth also, and vis-a-vis value also, because you are just betting on that turnaround will happen. And so obviously there's a lot of research which goes behind while picking up stocks or businesses or sectors. But yes, then this is a bet against something which is not in favor. So this is something which is out of favor, and then you buy. And this is what is the core difference between these two strategies broadly when we talk.
And while you were speaking, Kshitij, we were just pulling up the top performers in the value category, both on a 3-year time frame and a 5-year time frame. We've taken CAGR returns. And let's pull that up while I'm speaking as well. JM topping the list, gains of about 25.7% on a 5-year basis, 26+%. Incidentally, there are only 3 contra funds, and we have that also on the screen. SBI is standing head and shoulders above everybody else in the 5-year category and also in the 3-year category. The 5-year return CAGR standing at 30.5%. So quite the performance that has been managed by this scheme. Mohit, coming to you on this one, do you also agree with what Kshitij has just said about the difference between the two? And is it possible that while the strategies may not be the same, at least they might rhyme?
Thank you so much, Alex, for having me on the show, and completely agree with what Kshitij has just elaborated. I think it's very beautifully put together the difference between both the categories. Honestly, there's nothing much to add to what he has said. But yes, look, the contrarian style might not suit everyone. That's something for the investors to realize, that it is a high risk, high return kind of a strategy. You are actually either buying a falling knife, or you're buying something which is completely out of flavor, and you perhaps don't know why it is out of flavor, right? There could be myriad reasons why a particular sector or a particular company is out of flavor. And those reasons could be bad management, markets not realizing the right potential, or some corporate governance issues, or it's just that those have certain challenges, or historically they have faced certain challenges, or sectors facing some headwinds, right? We out here in a contrarian call, we are completely and wholly relying on the acumen of the fund manager. Alex, let me spell it out very clearly that a contra fund is different from a value fund in just one dramatic way, which is that the reliance on the fund manager is very, very heavy in a contra fund, because it's totally his ability to figure out that what is a contrarian by virtue of even having good governance, good financials, good fundamentals, and it will perhaps turn around. And what is actually contrarian by virtue of bad governance and other factors, and he keeps it aside, right? So it's a complete reliance on the fund manager out here. Whereas in a value fund, it is more about you find the right stock and waiting for the right time, right opportunity. You know that the time and opportunity will come. It's just that you have to bide your time and wait for the opportune moment to come. So value is intrinsically not a bad call. It's the right and the correct and the only perhaps recognized way of investing for a long-term scenario. But contrarian could be a high risk and a high return strategy.
High reward, yeah. I want to talk, incidentally, Kshitij, about this SBI Contra Fund, just to drive home a point. And in fact, it's something that has emerged when we were preparing the show as well. My producer and I were discussing it. And what he's asking is the construction of this scheme, seemingly, the portfolio, is tending towards large caps. It's got HDFC Bank, based on the last disclosure, at 5.45%, Reliance Industries at 3.8%. And then followed by GAIL, Tech Mahindra, Kotak Mahindra Bank. So it looks like a large cap. It feels like a large cap. Is it a large cap?
So Alex, this is on a very surprising note that banking sector from 2020 onwards has not done well. If you see BFSI or Bank Nifties is actually dragging Nifty by 3% data. So I think there's a negative yield what Bank Nifty is generating, and the heavyweights in Bank Nifty, whether it's HDFC Bank, Kotak, Bajaj Finance, Bajaj Finserv, and I'm just taking these names for education purpose, they have actually not moved much or not generated any much returns if you see as a top holding of these strategies. So now these stocks or this sector has become more like a contrarian call which many people are taking. So this cycle has not done well. These stocks have not done well. So all these stocks will feature in value as well as contrast strategy both, because obviously there's a clear-cut evaluated risk which fund manager is taking, as there's a clear-cut gap between valuation and what earnings these companies are doing. So that's why you have seen that you have seen these type of holdings as top holdings or among these strategies. While coming to the large cap part, what you are asking, so it's not been driven by that. These strategies are driven by that how much large cap they have to keep. It's as a function of that they keep on picking those businesses where there is an expected turnaround and where there is a valuation mismatch which is expected. And in a fiduciary responsibility as a fund manager, he will not like to take a bigger risk. So he will further make it a bigger portfolio in terms of number of holding which he is holding. And that's how you see that these are the stocks which are as key elements or as the top holdings.
Yeah, that's a fair point. And okay, I was looking at the assets under management also of this SBI Contra, and it's not a small fund in any stretch. It's 41,000 plus, nearly 42,000 crore of assets under management. It's got 88 stocks. I want you to weigh in on this as well, Mohit. The strategy that they're employing, I think you've both described this very well. But if you are trying to look for a mutual fund scheme in this space, first of all, do you differentiate? You've already said you should differentiate between value and contra. So therefore, when you go into something like this, what should your expectation be?
Look, Alex, so first I'll try and comment on the large cap aspect of this. Yeah. Look, typically when you're running a contra style fund, it's very difficult to identify a fully contrarian call on the small cap space. You have enough and more opportunities out there, but it's very difficult to differentiate a good management from a bad management, and to actually differentiate whether something is right now a good contrarian pick, or it's just gone out of the business, gone completely ori because of some managerial issues and everything. So the identification part becomes extremely tough there. While in a large cap, you know that those stocks have been around, those companies, those managements have been around. They're just more contrarian by virtue of maybe the business cycle or some other thing. Like so typically all the contrarian funds, not just SBI Contra, they're pretty heavy on banking right now. Even the value funds are very heavy on banking right now. Right, because of the sheer reason what Kshitij said, that the sector has been out of flavor for almost last 2-3 years, and few of the large heavyweight names in the Nifty, they haven't actually performed or given any positive returns for not just 3 years, but in fact full 5-year period if you were to put together. So it becomes very easy for a contrarian guy to get into those spaces. And also because the AUM is so large, which you rightly mentioned, SBI Contra is one of the oldest funds in this segment, one of the perhaps first ones to come out in the contrarian segment. And by virtue of stellar performance, I think the AUM is also ramped up quite quickly and nicely. So to place such a large AUM in small caps becomes incrementally tough, and you can't like really expand the number of stocks in a scheme beyond a particular level. So that's why they are more large cap lopsided. But yes, needless to say, today all the value and contra funds are loaded with banking. If you were to just see the similarity between a portfolio of an ICICI value discovery fund and an SBI contra fund, they have 38% identical stocks in the portfolio. So there is a decent amount of match. Having said which, 62% is differentiated also, and that's where the difference between the performance lies of a contra and a value fund.
Very well articulated. Thanks so much for that, and that answers my question. So therefore, is the interpretation right, Kshitij, coming to you on this one? If you are a small cap, mid cap investor, and of course you should have diversification. A lot of people simply say you can go out and have 30-30-30, and that will also do you a good job in terms of market cap diversification. But if you are predominantly a mid cap, small cap investor, because you've got a very long term time horizon, is it that you don't venture into contra, or you don't venture into value, and where does it fit into your portfolio?
So I think value is a core part of the portfolio, if you ask me. Value complements the growth strategies really very well. Mid and small cap also, as we all say, whenever you get into any mutual fund, just align it with your goal. So anything which is 10-year plus, small cap fund can be a part of that goal. Anything which is 7-year plus, a mid cap fund can be a part of that goal. And value can be a core strategy, because it always keeps on looking for ideas which are undervalued and buying in the portfolio. The beauty of mutual fund is when a fund manager churns and look for a better companies, then there is no capital gain which counts. So I think that really works very well. I think 15-20% portfolio can go towards value as a core part of the portfolio. Contra can be a tactical part of the portfolio, where yes, if you have a high risk appetite, if you are getting into all these small and mid cap funds, you can actually allocate 4-5% towards contra fund also as a tactical bet, and that's why you see the number of funds are really very less, because there's very less appetite toward this type of fund. So I think one can look at adding contra if you are a very expert investor in the equity market. You can actually add contra to your portfolio, and it can be a satellite part of the portfolio, not a core part of the portfolio. And at the max, you can have 5% of allocation toward this.
Mohit, I want to give you also the opportunity to talk about it. I think largely your view is the same on this, but why don't you articulate it?
Yeah, completely concur with Kshitij that a contra has to be your satellite portfolio. It can't be a core portfolio. It requires a certain amount of risk taking and risk ability to be able to withstand that entire, because the correction bouts could be fairly severe in a contra kind of a strategy. If you really were to go wrong in something which any which ways is contra, then it's a double whammy. Right, so you have to be extremely cautious. It is more a tactical part of your portfolio. It can never be long-term strategic part of your portfolio. Whereas value as a theme is more a style of investing, right? So you have growth style of investing, and these days you have quality, momentum, and other styles or factors coming into play. But value, for as long as we have known investments, has been the crux of all investing, right? Finding something below its intrinsic value is the real identification or the fundamental way of investing. So value will always remain as a core strategy, and that should form a core part of your portfolio always.
Okay, so a couple of questions then emerge here. Since both of you are saying that it must be part of your portfolio, Kshitij, first to you, there are periods of underperformance. Each of these strategies generally go through